Okay. Help me understand the first page, even though it's just overview, and the second page, just because they help set the stage for what you do and why there is these increases, as it were. In all, these are each separate programs, and I take it the dollars reflect personnel years mostly. Anyway, somebody explain this to me.
Good morning, Senator Cheney. Liz Hauser, Admin Deputy with the Board of Equalization. Most of the change you see here reflects the restoration of $28 million that was reduced from our budget last year as in lieu of the furlough. So we had $28 million reduced, and that money was restored. The remainder reflects our requests for BCPs this year. We've asked for 63 new positions, which total about $20 million.
Why do we have so many different funds? Can't we just I don't know. Why is this so complicated?
We are, we're funded through a variety of sources, but we are working on a proposal for the 11-12 year to look at rolling our budget up into more of a functional review where you would see sales tax and then property and special taxes as the display for our budget. So you can kind of see how we spend our time, and then the fund sources would still have to be shown, but they'd kind of be shown, we're kind of thinking they'll be below the line, so you won't have to see all the little pieces like this.
Let me just, the one program where you're going minus, where is that going? What is the NAFTA program? First page.
Yeah, the NAFTA. I'm going to have to get that information and get back to you. I believe that program was discontinued, but I don't have the detail here on it for me.
I'm just curious what it is and why it would have been discontinued since.
I'll have to get back to you on that one.
Okay. Related issue. Okay, so now we are on the tax gap reduction measures. Who wants to start?
Do you want to say something briefly?
Madam Chair, Ray Herzig, Executive Director, thank you for being here and for our being here. And with me is Liz Hauser, our Admin Chief, and we have staff from BOE here that's experts in certain areas, so they'll be speaking as well.
Okay.
Okay, yeah.
Okay. Our first item is our employee furlough reductions. BOE's 9-10 budget was reduced $41 million in lieu of furloughs. As I discussed earlier, the current version of the governor's budget restores $28 million of this cut. We are requesting restoration of the remaining $13.5 million that was reduced as a governor's veto message. We estimate revenues of $88 million, of which 52 is general fund, associated with this restoration for a 6.5 to 1 return.
Wait, the governor proposes 13.5. But you were reduced by 41.5.
Yeah, the total cut was $41 million, and it was accomplished through two different mechanisms. One was an actual governor's veto message of 13.5, and the other $28 million was just a baseline reduction. So we've been working with finance to go through the revenue loss numbers, and finance agreed with our estimated revenue loss. So in the current budget, the $28 million has been restored, but the only way we can get the $13.5 million back in, since it was a veto message, is to actually do a BCP.
He did the 28 in the base? Is that what you're saying?
Yes.
And can finance, last year when we asked over and over and over again how much these furloughs were going to cost, how come y'all couldn't figure out how to explain to people that this costs money?
We indicated at the time that we concurred with BOE's assessment that the furloughs would result in roughly $90 million in revenue losses, and we did score those revenue losses in the governor's budget, and we indicated this.
How much did you score for 09-10?
Approximately $89 million in current year revenue losses. And we'd indicated during the hearing that was held last July by the same subcommittee that that was the number at that point in time.
I'm going to start my chart of all the money we lost last year due to governor's vetoes and governor's independent actions. I mean, that we're not done with legislative approval. It's just so frustrating that we're looking at a $20 billion deficit, at least $1 or $2 billion that I seem to be able to count at the moment, that we're due strictly to actions of that kind. And I just don't know how we avoid that happening again. As we enter a next round of final budget for this year, I don't know how we avoid thinking we've solved something and then finding out later that everything that finance told us would solve it actually added to the problem. So I ask all to ponder that as we move forward in the future. How much more would, well, I know you've got some other BCPs that add, and so these other ones that we're doing are adds over and above both the restoration and the baseline.
Correct. Now, the restoration of the baseline does not add any new positions. That just funds our existing positions. It was the funding was cut, and we had to meet that cut by holding positions vacant and by our employees participating in a voluntary leave program, where about 1,300 of our employees voluntarily reduced their pay 5 to 10% to help us meet the budget cut.
But so the 13.5 doesn't add people either.
No, they do not add people. That's just to
are
fill our existing vacancies. It gives us adequate funds so that we can pay for the positions that we had previously had allocated to our department.
All right. All right. Is there any objection to approving this proposal for restoration? Hearing none on a 3-0 vote. The agricultural inspection.
We're requesting 58.5 positions. 16 of them are limited term positions that would continue, and $6,681,000 to permanently establish the Needles Ag Station Lead Program and expand the program to 3 more stations, Hornbrook, Truckee, and Needles. We estimate revenue of $36 million for a 5.5 to 1 return.
Why didn't we do that in the first place when we expanded these, if this was working in Needles?
We started with a pilot at the Needles station just to see, we thought this was going to work. We have an interagency agreement with Food and Ag where the truckers pull the bills of lading, send them to our auditors, or for the ag station attendants, pull the bills of lading, send them to our auditors, and then we follow up with the receiver of the goods to make sure that they were paying, that they know to pay the use tax on it. At the time, we were having kind of an estimate. It was a 2-year program. So we estimated revenues of about $9 million. Our actuals came in at $12 million.
Oh, good.
So that's why we were recommending making that station a permanent ongoing project. And then the 3 stations that have been identified to be added were based on our conversations with Food and Ag on where the bulk of the trucks came through and where we thought we could have similar success as we're seeing at the Needles station.
Okay. This just raised a different question for me, but is there a different way that we get this same information when goods come in from Mexico or to the port?
I'll have Jess McGuire from our sales and use tax. He can give you more details on the other types of like ports or airports, et cetera, and what our options are there.
Yes, I guess your question was twofold. One was with Mexico, and one had to do with things that come into our ports from.
Yeah, well, it's the same. It's the port of entry, whether it's a foreign port of entry, if you will, whether it's the Long Beach port of entry coming from who knows where, or the Otay Mesa port of entry coming from.
Right.
Wherever.
For the things coming like in Long Beach or the Bay Area, we do get information from U.S. Customs on the cargo ships coming in and where those goods are going if they have California-based destination. And so we do have a program that's our U.S. Customs program that we were funded for a couple of years ago, and we actually do follow up on those leads and assess use tax on those.
So as soon as they tell you, so you do have a way that you find out what goods are coming into California. I mean, because some of the goods are passing through to who knows where.
Right. Some are other destinations within our nation.
But you do have a system for getting.
We do have a system with the things coming through cargo ships and cargo containers coming into the country. With the U.S.-Mexico border, we currently don't have a specific program for getting that data, and I believe that data would still be some kind of manual data similar to what we're doing with the CDFA on information coming in from other states. We don't know if there's electronic data, but we are researching currently right now that as well as rail and air cargo to see what other information might be available for other goods that are coming into the state.
It occurred to me only because we have ag inspection stations at both Otay and Calexico, the two major commercial ports at least. There's ag inspection there already, so whatever system you're using for Truckee, it's larger in scale, and you have federal agricultural and state agricultural inspections at those ports, but it would seem to me.
I think in our discussions with Food and Ag, the Calexico stations and some of those areas, it's a lot of produce that comes through
Yeah, it is.
rather than things that we would
true.
normally tax, which is equipment, other things that they may be purchasing. So it's more of a non-taxable.
Yeah, in Calexico, it's a lot of produce. But
Right,
that's
we tried to
probably
balance
partially true in Needles, too.
the type of products that were coming through the different stations and the truck
Yeah,
volume.
but
that was coming through.
Otay, you're probably getting, well, then you've got the maquila issues.
Yeah.
So the stuff is I don't know what happens with that. The products where it started here and it gets assembled there and
comes back.
Those
yeah.
things, you don't get to do those, so, right?
No, those aren't ours.
That may be why. Maybe we should check what they have. Otay might have more of what you're. It's interesting. Yeah, Mexicali would be mostly agricultural, that's fair. And Tijuana is substantially produce, but not. Interesting point. All right, just curious. Anybody have any objection to expanding this program? Improving the positions, making more money? Was there any public comment? Senator Padilla reminds me that on either of these issues, sorry, before we vote. Hearing none and no objection on a 3-0 vote, that will be approved.
Okay.
Fuel tax compliance.
Fuel tax compliance, we're requesting to permanently establish 3 positions that were previously limited term and extend the limited term on 2 more positions for another 3 years at a cost of $530,000 to continue California's mandatory participation in the International Fuel Tax Agreement, IFTA, and the Joint Operations Center for National Fuel Tax Compliance. These programs are funded by the Federal Highway Administration and the Motor Vehicle Account. The IFTA component safeguards $3 billion in federal matching funds for California, while the JOC brings in $900,000 in federal grant funding over a 3-year period. These programs do not require general fund dollars.
All right. Any comment? LAO, public, members? Hearing none. Senator Padilla moves approval on a 3-0 vote. That will be done. Okay, here we go. Use tax collection.
Okay. From 2003 to 2009, California taxpayers who purchased goods online or out of state were able to remit the use tax by recording it on a line on the annual FTB tax return. The state collected approximately $10 million annually through this vehicle. The law sunset in 2009. Unless action is taken to remedy this situation, there is no easy method for taxpayers who do not have a permit to remit these taxes.
So this year we're not getting this?
Yes, we are.
The 9-10 year? 10-11?
It's sunsetted at the end of 2009. My name is Margaret Shedd from the Board of Equalization. And so that will be paid on the 2010 income taxes for the 2009 year.
FTB is
but that
calendar.
means we're done. That means right now, at this moment,
That's the end of it.
in 2010, when this budget year, so this is, have you scored this finance as a revenue loss, the fact that the governor vetoed this bill last year?
Chris Hill for Department of Finance. As I understand it, this this will be in effect through the 2010 tax year, so beginning in 2011.
No, sorry, 2010 return, which were filed last week, on which we lost. Those were the 2009 returns.
There was no impact in 2009, to our understanding.
Right, but in the 2010-11 budget, what is the impact that you have scored as a revenue loss?
My understanding, and I'll have to check this when I get back to the office, is that this was going to be in effect for purposes of the 2010 tax year. So I'll have to coordinate with my financial research people to find out what revenue loss they did score.
Okay. The law apparently very clearly said it expired in December of 2009 and finished at the end of the 2009 tax year. A bill was sent to the governor in the 2009 tax year to extend it so that we would not have a gap, and the governor vetoed that bill. So what we want to understand is, A, why it was vetoed, and whether anybody told the governor that that would cause a revenue loss in the tens of millions of dollars.
The governor's veto
Enough
message.
to pay for his next special election.
The governor's veto message, I believe, stated concern that this was a difficult tax for people to understand, and he was concerned by that, which is why he vetoed it. In terms of the revenue loss it has scored, I'd be happy to check with our financial research people. And
Yeah, I
find
mean,
out what
as
that
you're
number
preparing
is.
the May revise, at least let's be honest about the numbers. The problem is this was in effect for 6 years and nobody had any problem with it, and they collected $10, $15 million a year because everybody had a chance to do something. That, I mean, the only way we were getting around the federal problem that we've all had, because we haven't been able to get them to let these companies, which is the next issue, collect this tax for us. We invented this in 2003 after much, going back and forth and all the work we've done with streamlined sales tax and for years and years and years. And one way we came up with was at least to help people understand they owe the tax and they would voluntarily pay it. And this seemed like a really simple, straightforward thing. It was in effect for 6 years. I never heard anybody complain about it. I don't know if anybody else did, but I never did. And I think the bill that was proposed to extend the program last year did some positive things, actually. I think the BOE sponsored, right? To give people a lookup table.
Yes. Because
that does help people. It's hard to save every 10-cent receipt. We've been through this before. Mm-hmm. But you can kind of judge, okay, I probably spent about $500 and this is how much tax I would owe. And I think that was a great idea that would make it easier for taxpayers to comply and understand the deal. And I don't recall the veto message. I don't have the bill in front of me, but I don't know whether somebody forgot to tell the governor that he was vetoing a bill that was worth $14 or $15 million during a $20 billion deficit year. Senator Dutton?
Yeah, I just need a couple of questions on procedural type things with regards to this particular practice, more to refresh my memory. This is a particular item on the tax return, and it's basically a voluntary declaration of use tax and so forth. Whose responsibility then, if it's on the income tax return, it comes through the FTB, do they audit, or how does that all work, or is there any audit that takes place?
I believe they refer that to us.
Okay, so you have a procedure in place then that would take that, and there's already protocols, whatever, in case. Okay, and who would on the collection data and so forth? Does that all then, does the FTB then just transfer, I guess they transfer all that over to the BOE, or the BOE has that, and then, so you guys have that worked out, so you're working together on that as well? Okay.
We are reimbursing them for their cost to collect that information for us.
Okay. Also, the level of record keeping that would be required of an individual, could you kind of go over that with me a little bit, because I was unclear about what is the requirements reported on your tax return like this and so forth.
In AB 469, which is the board-sponsored bill last year, there was a lookup table, and I would say, let me first state that 38 states that have both the sales tax and the income tax, 21 of them allow them to be reported on their income tax. And 9 of those states have a lookup table. So we prepared a lookup table after looking at the other states. And so it was by, say, if your adjusted gross income was between $60,000 and $79,999, then your use tax liability would be $38 if you opted to use that table rather than save your receipts.
Okay, and then when you under audit, there's going to be a certain amount of record keeping that's required if you happen to be one of the lucky people that win the audit lottery. So, what happens? What kind of record information are you going to require?
Well, if you use the lookup table and you declared the $38 for that AGI, then there is no record keeping.
Then there's really nothing to audit. I'm trying to get to where taxes and penalties, things like this, if you fail to underreport, they're going to, if somebody's auditing something, I mean, that's what I'm trying to get around to. But they don't on this.
If you use the lookup table and you're putting the right amount for your AGI range, then that's sufficient.
Oh, okay. So then actually it's almost a benefit because you're you really aren't going to be audited anyway then. You're just kind of doing a declaration and this is it and it's the honor system type thing, right? Mm-hmm. Okay, thank you.
I think that was I mean, how did you do it when the prior, the one that was in effect for 6 years didn't have the lookup table, right? Or did it?
No.
No, it was voluntary.
So people just kind of guessed?
They just guessed what they felt.
But
they
I think
paid.
even Senator Dutton, even when there was no lookup table, there was no auditing of it because it's a voluntary disclosure. There was no way.
Oh, no, I was just trying to get, I understand now, because it's almost like taking standardized deductions. If you're going to do that, then obviously, you don't really, there's an accepted standard that you're assuming everybody spends this amount or has this amount of expenses or in this case, a direct declaration of tax. I wasn't clear on that before. That's the reason I was asking. So.
Yeah, no, and I think it does simplify it. It may make it inaccurate and probably, in some cases, to the taxpayers willing to pay it rather than try to figure it out. They're probably paying you a little more than what they may have owed. But businesses are now keeping track. You have a program now for businesses to keep track of use tax, right?
Correct.
On an accurate fashion. I mean, a true count, right?
There was a budget trailer bill that passed last year that said if the business has over $100,000 in gross receipts, then they must register with the board and file a use tax return.
Okay.
And those were due April 15th this year.
And this is the first time. So how did that go? Does anybody know yet? I mean, do we know that?
Did you bring the initial numbers?
Some preliminary numbers. About
Jeff McGuire again with the Sales and Use Tax Department. Our preliminary numbers through April 15th, about 1/3 of those that we registered had actually filed use tax returns. So still 2/3 hadn't filed them yet this year. Because it was a new requirement, I think a number of the businesses were trying to figure out exactly what they were supposed to do.
Okay.
So,
Do you know that we get more from having them return than we would have had we not done that? I mean, because you don't have the 2/3.
The use tax line compliance was about 2 out of every, I think, 100 or 1,000 businesses actually reported use tax when we had that on the FTB return, whereas individuals were about 10 times more likely to report use tax than businesses were.
So now it's mandatory for businesses, and people would do it because everybody knows they bought at least something online, so they just sort of go yes, right?
Yeah, and one of the things I think that we had in the bill was that the requirement that people must report it on the line. You either report your actual receipts that you have, or you select from the income table, and that eliminates any confusion
Yeah, no, I think that's a great idea.
From tax preparers
Yeah,
as to
so
whether or
that
not someone
people-
needs to put a number in there.
Yeah,
Because
no,
there
I
was
think-
some confusion in the past.
Okay. No, I think it's a great idea. So I would suggest, I mean, I don't know if that we do this here now, or I don't know how you feel, Senator Dutton. It seems to me that it's not inappropriate to do trailer bill language. I understand there is a bill floating around, but this is a tax enforcement collection issue extending a sunset that should have been extended last year, and adding a provision for a lookup table, which seems to me, perhaps on the reverse of my earlier discussion with Finance, would allow them to score $14 million more in the budget year than they have scored to date.
I think I'd like
Leave
to
it open?
if we could just hold it over maybe for whenever our next meeting is. I got to double check because I'm inclined to support it now, but I want to check.
Think
some
about
stuff,
it.
so.
Yeah, and maybe if we craft the trailer bill language, we can avoid any problems with whatever may have caused it to
I
create
just
a
got
gap.
to double check. I
Just think about it.
try
Yeah,
to figure
no, that's
out
fine.
why we had opposition to it.
Okay, let's keep that open, but I appreciate the explanations. It's always helpful. All right, now, next. Oh, Senator Padilla's not here. We're leaving it open anyway, so that's fine. Okay. All right, next issue, related. How on earth do we really get folks get this money collected.
This is the use tax
but-
nexus.
Yeah, the nexus.
ABX 88 would have required certain out-of-state sellers to collect and remit use tax on their sales to California firms or residents. If this law is enacted, BOE estimates revenues of $107 million in the budget year. BOE's estimated costs for administering this program are approximately $2.9 million for a 36-to-1 return.
Let me ask, this is always confusing to me, because I think somewhere earlier here, the number that I always recall that we sort of don't collect by virtue of the inability to get money from these out-of-state sellers is more like $1 billion. Is the reason this $107 million is just because of the nexus thing? Is there other ways to do this? I guess the thing we just discussed is one way of trying to collect this tax that's owed. But I had always understood, is the number that we think is missing on use tax closer to $1 billion or?
Well, the way we arrived at the $107 million is we looked at the state of New York, because the state of New York has enacted a law that requires this to be paid. So we looked at what New York what they expect to collect. They expect to collect about $70 million in 9/10, which translates to about $848 million in taxable sales. So we took that and brought it to reflect the size of California's economy. So we estimate comparable sales for California in 9/10 to be about $1.7 billion in sales, resulting in about $100 million in general fund sales and use tax revenue. Then we assumed the 6% growth based on Department of Finance's forecasts for taxable sales to arrive at $107 million for the 10-11.
Okay. But the nexus, let me just, maybe somebody else, and LAO, maybe, I have heard, this is the New York's version of how to get to this. Every state, like 40 states are grappling with this issue. We've been fighting for a long time. I've heard Colorado had another way. Anybody know what that is?
Does Robert know?
Was it Colorado or
Yes.
somebody?
This is Laura Stewart, the LAO. This is referred to as the Amazon law, and tries to attribute nexus to affiliates who paid a commission and for referring sales to the remote vendor, and therefore it doesn't attribute nexus to other kinds of marketing arrangements, which compensation is not tied to referral of sales, and so that's why that's. Perhaps you're surprised by sort of the amount of revenues that this number could generate, because it sort of only gets at certain types of marketing or sort of certain types of business relationships between the remote vendor and the in-state affiliate. There's other ways you can attribute nexus. One way that has been that you might be aware of is the Colorado state. They try to attribute nexus through what's called the due process nexus, which says that the state can attribute due process nexus and sort of try to work with the remote vendor and try to have them to notify the purchaser of the liability of use taxes owed. And so that's what they try to do.
I see.
So far, that is also in court in Colorado. But it's definitely one way that's possible, that gets at a different approach to collecting use tax.
Yeah, it seems like it wouldn't be that hard. Yeah, even if it was, they didn't collect it, for somebody to put the table, if you will, have the software in place so you could calculate your own sales tax, and at least then you could keep your receipts to put on the line, or you could use the table, but... Is that what they tried to do in Colorado? Did somebody actually try to implement this in Colorado? Are they doing it, or did it get enjoined before they could?
The Colorado program, as we understand it, is that they made it a requirement for any businesses that sort of have remote sales to report and return data on sales to the state, and they also have to notify the purchaser of the use tax liability. And they don't do that. If they don't do that, then the state of Colorado will impose a penalty on that remote vendor. And I think they're the only state that has tried to do that
But what I'm asking, I guess, I get that they tried to do that. What I'm trying to figure out is, were they successful at all? I get that they get sued, but is it like New York where they collected the tax while they litigated, or?
Because this is a purely a notification thing, so it still is dependent on the taxpayer to actually remit the tax in order for revenue to actually be realized.
But is Amazon or whoever actually providing the notices at this moment in time?
I do not know. It seems to be that they're not, because they're actually taking this to court, and that and I think the decision probably hinges on whether or not Colorado can impose the penalty. And this is this.
Well, that's what maybe they
nexus.
tried to impose a penalty, and that's when they went to court.
Yeah. But yeah.
Did you have a comment? I mean, I'm just curious how everybody's trying to get creative here and accomplish this, because everybody's going through the same problem. So.
Right. Randy Ferris from the Board of Equalization's legal department. They are definitely litigating it, and they're also raising commercial speech issues and things like that, that it's a violation of the First Amendment as well as due process and other things. So it's a complicated litigation matter.
Is it more complicated than the New York nexus? Pick one.
I think it is, actually, because some of the burdens that are associated with the record keeping.
But it would capture more folks. Is that the problem with the New York version? Is that we only get, in theory, 107 million of what we know is probably $1 billion worth of use tax floating around out there in cyberspace. So I'm trying to figure out how the voluntary gets at some of it, and giving the tax table, and maybe there's some other things we could do to give notice to taxpayers or make them aware of the value of this and the fact that, I don't know, somehow it seems when you buy something on the internet, maybe we could ask them to just put a notice that says, if you were from these 40, this list of 40 states, please be aware that you owe sales tax on this item. I mean, even if they do that, people would voluntarily pay it. It's just so frustrating. Anyway.
I'm sure for a price they'd let us put that on there.
For a price?
Yeah, they sell that space, I believe, as advertising.
Get a cookie. We've got to get a cookie that pops up.
Yeah.
No, but it shouldn't be us. They should have to. I mean, that seems not an unreasonable burden on them to put a notice on.
Yeah, it seems that the burden has to be fairly apportioned to the activity. So in this case, since the remote vendor, we cannot impose the collection burden, but we can impose the notification burden. Ultimately, the burden to pay the taxes falls on the taxpayer.
Right.
And so we need a way.
But giving them fair notice of that at the time when you buy the online good would seem not an unreasonable thing to do.
That is sort of what this due process nexus is about. But you do have raised the question of whether or not we can still collect the revenue, and that revenue realization depends on whether or not it is possible for the taxpayer to pay taxes at that time of the purchase. And setting up that system requires a little bit more thought.
Yeah. But you could at least maybe capture more on the thing we talked about previously, the voluntary thing with the table.
Yes.
More people might do that if every time they bought something they saw a sign that says, oh yeah, remember you owe something.
Right. Right. It could be like a record keeping kind of a thing, or
to the taxpayer, who's the person who's stuck. I mean,
yes.
If the companies are going to avoid their responsibility, we still.
Right. Because
Anyway, I don't know. It's just I'm just trying to think of ways. I'm sure people spend a lot of time at BOE trying to figure this out. So if you've got any other creative ways beyond what New York and Colorado have done, we're open. All right. Anybody? Oh, Mr. Goldberg, I think. And somebody else, maybe?
Yes, Lenny Goldberg, speaking for the Northern and Southern California independent booksellers, and we've been the canary in the mine shaft on this. We have been looking at the problem of people getting killed by tax-free, out-of-state sales that are being promoted by many thousands of people in California who are driving sales for pay to their website, to a website that does not collect tax in California, and the $1.7 billion estimate. I think the 107 does not include the money that would be also collected by local governments. Now, there's no undue burden issue here.
But it's only those who actually...
No, it does not include. I'm sorry.
It only includes the people who actually engage engaged in the practice of having somebody here sell their stuff.
That's correct.
why it's limited.
And we feel like there has been presence in the
minimal,
state
but-
for a very long time, that in fact, if people get up and say, oh, and I think the chamber may say this, oh, you know, you're going to hurt people making income in the state of California, that itself is it's not on its face, but very close to saying we've had all these representatives, agents or representatives under Section 6203 of the Revenue Tax Code that are actively soliciting sales in the state of California. We should be looking at collecting back taxes that have been paid for hundreds and millions, if not billions of dollars that we've been losing. So we support this effort. And, you know, people say, and you'll hear this, oh, we're going to pull our affiliate program out of California. Well, they didn't do that in New York. If they do, that affiliate program is driving sales to a tax-free enterprise. If they do, then our California companies like Walmart and Target and those who collect sales tax, so if people are still buying online and are not driven to somebody who avoids sales tax collection and whose business model has been to avoid sales tax collection, then we'll collect taxes from some percentage of those sales that go to California companies or people with presence in California that provide jobs, that pay taxes and collect taxes on their online sales. So this is a win-win situation. We really have to make this step. One more comment, sorry to go on. If we do it in California, you know, your frustration for years is how come the feds haven't acted? My frustration is the same. If we do this in California, there's a growing understanding that it'll put pressure on the feds to take care of this problem once and for all.
That would be nice. All right. Others?
Madam Chair, Member Stacy Dwelly on behalf of the Home Depot. It's kind of hard to follow up after Lenny, but I will just say that the Home Depot strongly supported the Nexus provisions in AB 8X and supports this provision as well.
Thank you. Wait. Well, I got one of you here. Are you a company too? I mean, I don't care which one of you. If you're. Yeah, no, I'll take her then. Okay. Tell me how hard and how costly is this little software that you have to put in so that you can calculate somebody's tax online? I mean, because you do it, right? I mean, you do it.
We do it, yes.
You buy online.
It must not be that hard because we do it.
Oh, okay. You're not the person? Yeah. I mean, it seems
I can
to
get
me
you
this
those
isn't
exact
that hard
numbers.
anymore. There is a software, as I understand it. This may have been 10 years ago, this was more complicated. And part of the argument has always been, you know, how can anybody know all the different sales tax, especially here? But here we make it easier for people, I think, BOE, because we have them send it all to you. We don't make them send the 2 cents to San Diego and the half cent to the county and 3 cents to here and 5 cents. We say, BOE, send the whole, whatever. In my particular city, it's 8.75. So they say send the whole 8.75 to BOE, and you worry about getting the county of San Diego and the city of Imperial Beach and everybody get their little piece, right?
Correct.
Because one of the issues at the national level had been that. Oh my gosh, how are we going to figure out all the crazy little jurisdictions? But you do figure out the jurisdiction. Somehow somebody has invented a software, I'm told, that can actually at least figure it out. Collecting it and remitting it is to remit to all one place for you is done. And so all you have to do is have the software so that when I plug in that I am from this zip code, it automatically tells me how much I pay, right?
Actually, Madam Chair, it goes beyond that. One is that Amazon has collected for other companies for years. They've been a remittance center for other companies and have done all these calculations and remitting. The software is cheap, but secondly, there are services, very inexpensive services, that will do fill out all the forms for 50 states and do all, or 47, some don't have sales tax.
Yeah, 40 or so. Right?
Fill out all the forms and remit for a very, very low, and remit your tax on that basis for a very low cost. The software program says, what's the zip code, what's the,
right,
that's $99 for any vendor.
Really?
Right, that's correct.
Like
but
zip code?
beyond that, obviously the bigger companies have much more sophisticated situations, and but there are also, even for smaller companies, remittance services where you just remit it, they divide it up, they deal with the equivalent of the Board of Equalization in every state. So this is all very doable. There's no undue burden that's arguable. And Amazon has done it for years on behalf of other companies. Just not on behalf, Target at one point, they were the fulfillment center, not anymore as I understand it. The Gap, Gap has stores everywhere. Amazon contracted with them to do their online sales and then remit all the sales tax. So they've done it already. They know how to do it, and they will do it.
I mean, I know, because it's to the Home Depots and the Walmarts and the Barnes and Nobles and the folks who are doing it. It just seems like such a competitive disadvantage, unfairness. I guess it's not really a huge disadvantage, but it's an unfairness, and it's and if it seems like it can't be that much of a burden on a business if a lot of businesses are doing it. I understand it if you're mom and pop quilt maker and maybe but the level of somebody who does more than, I don't know, you guys pick a number, than $1 million worth of sale in the state any given year, X million dollars worth of sales, that they ought to be considered to have nexus because they're selling off of my computer, which is located in the city of San Diego. I mean, I kind of don't get that part. But thank you very much for being here. Appreciate it.
Hi, Madam Chair, members. Mira Girton with the California Chamber of Commerce. I actually wanted to just start by mentioning, in terms of your discussion earlier, there are actually two bills moving through the Assembly, one of which passed off the floor today, that address this issue in different ways. This morning, AB 2078, which is authored by Assemblymember Calderon, started out as a
2078?
Yes, 2078. Started out as a modified version of the Colorado Nexus bill that passed in March this year. It was pared down and now would require that out-of-state sellers put a notification on their website or their catalog informing them that they might owe use tax on their product in their home state, just depending on the state's laws. At this point, I think a number of trade groups have already removed their opposition. We're in the process of analyzing it, and we'll have an answer by the end of the day Monday. But so that notification piece you guys were talking about is in place. It's moving through the legislature, and again, it was voted off the floor today. Also, Assemblymember Ma has a bill.
So it'd be a notice, and you're saying those companies won't sue us for requiring them to put a notice?
I mean, the California Chamber of Commerce.
We don't have the ability, therefore, to do that?
The California Chamber of Commerce doesn't represent a ton of out-of-state retailers, as you might imagine, because we're the California
state. Well, one would hope not, but you seem to represent their interests more than those of California companies.
Yes, but those that we do represent at this point, I have not heard any opposition from them. Again, they have until Monday afternoon to reply, but it's looking like we will also be moving neutral if the trend continues this week. The other bill, I think it's 2767, AB 2767. It's by Assemblymember Ma, and that actually would reinstate permanently the use tax reporting line on the personal income tax form. It has a number of other provisions to help aid use tax enforcement, but that is also moving. I don't exactly know where that bill is. I know it made it out of Assembly Rev and Tax, so it may actually have been heard this morning. So there are two measures in place. In addition, you guys also talked about the use tax registration requirement for small businesses. Her bill, Assemblymember Ma's bill, has an extension of that to cover all of the small businesses. I think there were a couple that weren't covered, so it will be expanding that requirement. So I think those things are definitely going to help the state to bring in a lot of the use tax that we're not currently getting. Again, as part of the chamber, we encourage individual enforcement of this. We believe that use tax requirement stands with individuals, in addition to it being unconstitutional to apply it to out-of-state companies. Some of the side effects to in-state companies with the affiliate nexus model, I think, will cost the state as much or more than it would possibly bring in, assuming that they do end up complying. And the Colorado version, I think somebody mentioned earlier, raises even more constitutional issues. So we would, very much like to see the measures that are moving to continue to move, and the use tax registration from last year to have a chance to take effect. And I think it will resolve a lot of the issues for the time being.
What from last year would take effect?
So this is, I think it was also part of the July budget trailer bill with the use tax registration for small businesses.
The businesses.
Yes.
Yeah,
Are either of the bills urgency? Does anybody know? I mean, I'm not real excited about these things not taking effect till next January, so
Yeah, we're familiar
we
with
might
them.
want to consider adopting them.
I'll have
as
Margaret
training.
Shedd come up and talk about the MA bill. She's familiar with that one.
Okay, thank you.
Okay, thank you.
The MA bill that was mentioned is AB 2676.
Yeah.
It's not an urgency bill, and it doesn't do, all it does is delete the sunset date, so it will be a permanent thing where you can voluntarily fill out the use tax form on the income tax.
Doesn't add the tax table thing?
No. And
we could still do that, though.
correct. And the other thing that it doesn't do is what the bill that the governor vetoed, AB 469, which was also a board-sponsored bill, which stated if you did not pay your use tax to the Board of Equalization in the prior year, then you must, it's a mandate, pay it on your income tax form.
Do that again?
Okay. It's
How
kind
would
of
you have paid it if it wasn't on the form and you didn't have, I mean...
If you didn't remit it to the Board of Equalization and declare it to them on, which no one ever does because there isn't a form,
Right.
The only way you can do it on your income tax form is voluntarily.
Right.
What the AB 469 did said, if you didn't do it, then you have to do it on your income tax form, which gives a little more teeth to the tax practitioners to tell the taxpayers that you need to do that. Right now, it's kind of viewed as an optional, voluntary
So it
thing.
would essentially try to make it not voluntary, but a line on the tax form, just like any other line on the tax form, which you are required to fill out.
Correct.
And if you had the tax table that was proposed, then you could protect yourself against the theory that you might be using the wrong number, right? That's the...
Correct.
Your
Correct.
protection would be based on use of the tax table would guarantee you protection, right?
Right. And you wouldn't have to save your receipts.
So even if it was mandatory.
Mm-hmm.
Well, that's interesting. Okay. Senator Dunn?
Because the law does require that people
Yeah,
pay
it is.
use tax.
I mean, you owe it, so why
It's,
not?
it appears
Yeah.
the tax practitioners occasionally are confused on whether or not the people should remit on that line.
Right.
Well, they
Because it was
don't feel...
voluntary.
The tax practitioners argue they don't feel that they have an obligation.
Responsibility. I get that part. Okay, go ahead. Senator Dutton.
Well, now I'm confused again. I don't know if this is voluntary, mandatory, or what, and if I'm confused.
Well, I think we just need to decide which one we think makes sense. I mean, they're saying the new bill doesn't have that mandatory requirement in it. The bill that was vetoed did. So
right.
that would appear to be one of the concerns.
Well, it might be nice if we wait until they get through all the policy committees. But on the court cases that are on this issue here, when do we expect some kind of a final review from the courts?
On the Nexus issue, I'll have Randy Ferris, who's tracking that, come back up and speak to that.
The New York case, yeah.
As to the New York case, it's currently on appeal, and I don't know when to expect an opinion. It
Do you
would
know
seem
how long
reasonable
ago the
within...
trial court opinion was issued?
It was, I believe it was last calendar year that the trial court dismissed the lawsuit.
Okay.
So I would expect sometime this year, but these things can drag out.
We might get an appellate court decision, but then somebody's likely to appeal to the next level.
Correct, yeah, because it's
But if we
at
win 2
intermediate.
rounds, is that good enough? Maybe not.
This, I would assume
can
this
we-
would go all the way to the U.S. Supreme Court,
Could
so
we
it could be years.
consider whether California, even if we didn't have the law, to enter as an amicus or something? As one way to help? I don't know. Interesting problem. All right, well, keep us updated as we go. If anybody hears anything new on either of those lawsuits, we will track the bills now and kind of take a look at that, and maybe we can work with the authors. I mean, what I'm more concerned about is picking one of the solutions and getting it in place more quickly than what I'm all for it going through the policy committee, but I also think we might want to adopt it in a way that creates urgency and gets it done sooner rather than later. So particularly the extension, so that
That'd be helpful.
to the 2010 tax returns are not left out in the cold is what I'm more concerned about. And I like the tax table, and the mandatory we could debate, but it seems to me it really is required. It really is. So what's the problem? Is kind of, but anyway, all right. All right, so maybe we can work something out there. Thank you all very much. That was enlightening. All right, next. Skill tax swap.
fuel tax swap. We're requesting 9 positions, 7 permanent and 2 two-year limited terms for $1,412,000 and in the 2010-11 fiscal year. And then in the 11-12, an additional 2 positions at a cost of $91,000 to fund the implementation of the legislatively mandated fuel tax swap that were in ABX 8-6 and SB 70.
All right, so why does this require new people? I'm sorry. We're collecting the money, we're just collecting it differently. Sorry.
Yes, David Gow, Deputy Director of Property and Special Taxes, the board. These are actually 2 distinct programs. The reason there's not an offset is, first of all, in the sales tax reduction, it's a state exemption, that portion of the gas tax. So there is still the local and the transit taxes that are applicable to those fuel sales. So we don't, when we look at this, the number of audits in our sales tax program, this isn't a large field of them. And typically when we're doing a gas station audit, it's a mini mart, and there's convenience food sales, there's many other types of products that are for sale. So it doesn't reduce the sales and use tax program's audit workload. In fact, one of the positions we're asking for is because the changing rates, it does complicate things for taxpayers, and we do see increased numbers of errors. So it's one of the positions is to take those errors into consideration. On the fuel tax side, what we're seeing is there's a number of elements, workload elements. The first one is the floor stock. Those are temporary positions, and those are for the inventories that on July 1st, retailers and others that haven't paid the increase, there's a one-time true up, I'll call it, of the rate increase. So there's temporary workload with that. We also have, this is going to take our fuel program from 18 cents a gallon, about 3.3 billion annual revenue sources, to nearly double that, to about 6 billion. So there's a lot of audit exposure. We have a lot of audit recovery in this program. We think that if we aren't prudent in protecting that, and these are a number of audit resources to protect that increased revenue stream to the state.
Leo, thoughts on workload?
We would like to, we agree with the staff that we should hold this item open because we just received some information from the Board of Equalization yesterday. We're trying to just, go over that, review that, and fully determine if these are justified.
Okay. All right, so we'll hold it open until we can analyze the data on workload with respect to how many new positions and.
Okay, thank you.
Let me. Finance is approving these. I take it this is finance, or this is an April letter because we hadn't passed that yet, so it's not in the governor's budget. So here's the question for May Revise: if we were to do this. The interaction between the governor's proposals to cut people's salaries if he doesn't do furloughs and the same kinds of stuff and adding overtime in, it's sort of confusing to me. It's the same problem I had last year with furloughs and overtime. I'm not real excited about cutting salaries and giving overtime. That's really dumb. So I'm trying to figure out kind of how to think about that. And to the extent a program is asking for overtime, I understand you'll have seasonal needs, if you will.
That's correct.
Okay.
Yeah.
But I don't know how many resources you could shift around, and maybe it's one position here that's half-time somewhere and half-time somewhere else. I don't know how that works. But I'm a little hesitant with 2 major things, contracting and overtime. Contracting out and overtime in this environment when you're cutting people that work there already doesn't seem sensible. It didn't seem sensible last year. It doesn't seem sensible this year. And I'm a little bit, I'd rather you kept 2 people whole than fire one and then pay overtime to the other one. It didn't make any sense.
I'd like to clarify that the Board of Equalization is exempt from the governor's executive order increasing salary savings by 5%. So that might help with their considerations at all.
So do you support these positions or not?
Well, yes, the Department of Finance approved this finance letter. I'm just clarifying that the Board of Equalization is exempt from the governor's executive order, which is increasing salary savings for departments by 5%.
But they're not exempt under your theory, even though some of us may not approve it, from the 5% salary reductions and the other 5%, whatever it was.
Correct, but we're not requiring the Board of Equalization to increase salary savings by an additional 5%. Board of Equalization employees would be subject, if it's approved, to the 5% pay reduction, to the 5% increased PERS contribution, but the board.
And you want to ask?
But the board would not be subject to the additional 5% salary.
No, I
savings.
get it, but it just doesn't make any difference. You're still, anyway. I just some interaction between those kinds of proposals and overtime and contracting out needs to be made. You don't ever make the analysis. People come forward and say, well, that's fine. They're going to cut everybody, but now I want to pay overtime. I mean, it doesn't help.
And to clarify, in our proposal, we're asking for limited term positions.
All of them?
Yeah, 7 of them are permanent. Yeah. 2 of them are limited term. We have minimal overtime hours. I think we were looking at maybe.
Well, you're looking at that issue of the seasonal problem.
Correct. It's in our mail services.
Yeah, we have. It's like 50 hours over the full year in our mail services based on extra returns coming in. But it's most of what we'll be using is permanent staff to do this work, working their standard 40 hours a week.
Okay.
And then we have 2 positions that would be limited term for 2 years to handle
this transition.
The transition and one of them is.
Oh, so you're not at 11 anymore. You're at 9 now.
For the first year, we're at 9, and then we don't need the auditors until the second year because the audit workload won't really arrive until 11, 12. Right. So we're asking for
this is the
2
proposal
positions.
You all are looking at. Okay.
Right.
We'll leave it open, let everybody look at it. Hopefully we can settle that one next week. Okay.
If it pleases, excuse me. I'm sorry. Real quick, you had a question at the outset of the hearing on the NAFTA reduction.
Yeah.
NAFTA was obviously the North American Free Trade Agreement, and we had funding when we were considering the Mexican carriers from coming into California, and we were going to host them for one of our fuel tax programs. Obviously, that hasn't happened, and this federal money is being reduced by that. So it was part of that agreement.
Well, they reduced the federal money because but it was their decision not to do the program.
That's correct.
Okay. Thank you. Just curious what that program was.
Yes, you're welcome. Thank you.
All right. Our favorite topic. Where's DGS and BOE to tell us how many people are out on workers' comp due to mold this week?
Just if I could, a quick overview of our building. The building was built in 1993. BOE moved in and experienced water intrusion with the first big rains. The water was coming in from the roof, leaking through several windows, and in from the 23rd floor balconies. The window system, seals, gaskets had failed, which caused not only leaks, but a few of the windows to actually fall out of the building and onto the parking garage roof below. BOE eventually was successful in getting funds to repair the windows, and just as this project was being completed in 2007, mold was discovered on the upper floors of the building in September. The floors were evacuated, and BOE was told the mold was isolated to only those floors. Further investigation by DGS's consultants discovered mold on every floor of the building, requiring building-wide remediation. Since the decision was made to leave BOE in the building during the repairs, we have had to move all of our employees off of a floor at a time, into swing space, then move them back after the repair was completed. BOE has estimated lost productivity of 111 PYs and lost revenues of $22 million associated with these moves. Including the window repairs, the state has spent $32 million on the building during the past 6 years and is planning on $32 million, including the window repairs, and is planning on spending another $28 million to complete the needed repairs. In addition, the BOE has outgrown the building as our headquarters operation. The building houses a maximum of 2,200 people, and we need space for about 2,900. To address this shortfall, BOE is in the process of moving approximately 700 employees to 3 separate locations in the greater Sacramento area, which is not the most efficient way for us to do our business. BOE thinks it's time for the state to take a serious look at the best fiscal decision for this building. We have contracted a study with the California State University in Sacramento and UC Irvine to provide a fiscal analysis of the building as well as an appraised value. We plan to present the study to the legislature, finance, the LAO, and DGS no later than June 15th of 2010.
That would be good. Sooner rather than later of June 15th, if you can get it.
We're trying.
Yeah. Go ahead. Are you DGS?
Senator, I'm Bob Courtner, the Assistant Deputy Director with Real Estate Services Division with DGS, yes.
And your perspective on this eternal problem? I mean, last year, I don't know if you were the one, last year we had this conversation more than once about wouldn't it be cheaper in this market when there's a lot of open real estate lying around downtown Sacramento to just lease something and move on? I mean, and get all these people together in one place and that didn't have mold in it and stop shuffling them around and losing us money. Every minute that you let these people not work costs everybody money on top of whatever you're spending. So what happened to that?
Senator, we've not been given any funds nor been given any or had any requests to move Board of Equalization, official requests to move them out of that building. As
I haven't heard anything but requests from them for 5 years. Where have you been? I've been hearing that request every year for 5 years.
Chris Hill for Department of Finance. The administration, this in perspective.
It's deaf. What else?
The administration, this building, the administration has taken out a $90 million pooled money investment authority loan to purchase the building from CalPERS. And so bonds will soon be issued to pay that debt back to PMIA. So at the end of the day, the state cannot just walk away from this building because it's a $90 million investment. And this, I'm sure DGS can fill you in on the remediation activities, but as the administration understands it, those are going along on schedule and will be completed in the fall. And that should take care of all the mold problems of which we are currently aware.
And then we'll still have 1,000 employees without a place to sit.
And the administration also approved a BCP last year for supplemental housing space for 500 of the employees, which should solve the current overcrowding issue that
she just said it was 900, and you said it was 500.
It's 700. It's about 700. However, any new BCPs that we get to add positions to raise revenue, they can't go in that building.
There's no place.
So we have to move them to space outside of the building.
I mean, for 5 years we've been talking about that they should have been moved and a new building should have been built over at Rancho Cordova to go with FTB. Anybody remember that conversation? I mean, it's just that nobody presents a solution here. I mean, everybody knows this was a bad deal when we bought the stupid building, okay? So now, how do we put it in a condition to get it sold? How do we save our money by protecting everybody? I mean, if they'd have moved everybody out like we suggested last year and put them in rental buildings that were cheap, then when you could go fix it up, it would be cheaper and faster to fix it up, and then you can rent it to anybody you want. If you can get these folks housed so they could just like do their work. I don't get why that hasn't been a proposed solution.
Well, the proposed solution is for Department of General Services to carry out the remediation efforts to repair the building, and those efforts, as we understand, will be completed in the fall, and the building will be fully habitable by BOE, and the problem will be solved.
And a clarification, that the repairs will be completed in January of 2011.
Maybe.
No, they will be.
And that's the.
So they got to go through one more rainy season with the mold, just in case there's more leaks.
There's never been any indication, any scientific data that shows that there's any type of mold release within that building. What we're trying to do is prevent any mold release from within that building.
I thought somebody last year told us they had found mold in the walls. That's why they kept having to move them between floors.
How that is judged is we take an ambient mold reading outside the building, and it's never been, the mold count has never been higher inside the building than what it is in the ambient outside the building. And we call that an unremarkable result.
I think you're talking about air quality testing.
Right.
Yeah. So he's talking about the loose mold spores in the air.
Right.
There is mold, though,
we're talking
behind the walls and under the carpet type that you're working on. That's why you're remediating.
Correct.
So it's moldy.
But it has not caused any health, or we cannot show any data that shows that anybody has been exposed to any more mold than what's outside the building.
Except you still have to remediate it and
Absolutely,
have
but that's
people
different
off the
than
floors.
that is different than what was stated.
Well, I guess wet and uncomfortable counts as moldy in my, okay. It's wet and uncomfortable, they can't work there. So you're having to go in, you're having to move people around to places where they don't fit. I mean, how's this floor by floor thing going? What floor are we on out of this 20-story
11
building?
of the 22 floors have been completed. Our staff, BOE staff, is getting very, very good at moving people, which is not really our core business function, but we're getting very good at it. It's lost time, it's lost productivity. People are, unsettled when you move them. We have 2 floors available, 11 and 22, to swing our people to. So they have to pack everything up, and we move all of them.
So like they go to 12, and then you move everybody
They
to
go
11.
to 11, yeah.
No, but I meant he starts on 12,
Right.
so you move everybody to 11. He finishes 12, they move back, then you
And then
go
I
to
move the
13,
next
and then
floor up.
13 goes to 11? Oh.
Correct. And when you're talking a floor plate of 150 people, it takes us a full 5 days to move them. We break them into quadrants and move them to quadrants to try to reduce the productivity loss. So it's very...
And we're spending money. I mean, I just, and it's CalPERS, our own agency we bought this lemon from. Why is there no recourse? I mean, why did we buy this lemon? What was it that CalPERS told us that?
The building, the purchase of the building was precipitated by the fact that the loan on the building, initially when we were making payments to CalPERS, was well over $100 million. I don't have the exact figure, but by doing this refinancing, we're able to reduce that down significantly to in the $90 million neighborhood. So we saved a great deal of money by buying it and refinancing it, essentially.
But this was when? 03?
We purchased, well, the initial lease purchase we entered into in 1994.
Right after
when we consummated the purchase was in January of 2007.
By that point, we actually knew it was a bad building. Why did we do that?
We knew that we had repairs to the windows. We didn't discover the mold until
September
of 07.
Immediately after we consummated the sale. And has anybody, what's the status of going after any of the contractors or anything, or it's just it was too old by then, the building?
Because of the lease purchase agreement, some of the conditions within the lease purchase agreement, i.e. it was a what they call triple net lease, we had the responsibility for the maintenance and repairs of the entire building the entire time. And because of the statute of limitations basically had run out on any recourse back against a contractor on that.
And actually, there was some actions against the contractor within the 10-year period.
Yes, there was.
And there's I've been, anyway. Somehow the state apparently, when they exercised their options and relieved CalPERS or anybody else of all liability, and we assumed all responsibility.
Actually, that was done early on. That was done in the 90s.
Yeah.
Spending all this money, I don't know, just 28 million and 32 million, and it seems like for that and the 90 million, we could have built our own building.
And as a clarification, we are now down to somewhere between 5 to 7 left to spend. Most of that money's already been sunk into that building. And that's what DGS is going to put in there, and Liz also has some costs that she...
Yeah, the total
DGS, you get all your money by telling them they got to pay you. So you don't have any money of your own. And what's frustrating to me is they're paying you for this painful thing that they're doing. I wish we did have a way to make you just pay for it. I'd feel better.
As would we. Our total numbers not only includes, we're looking, Bob's group is in charge of the remediation, which is the mold remediation project. Our estimate that we're giving is based on all the work that DGS's consultants in total have indicated needs to be done to the building. So in addition to the mold remediation, there's an elevator modernization project. At least this year we're not here complaining about elevators falling. They're performing a little better. And then there's an infrastructure study that has been that was contracted by DGS, the Stantec study, that indicated there was quite a bit of infrastructure work that needed to be done. So that was about another $10 million. So when we looked at the total amounts I gave you earlier, it was the windows, the mold remediation, the elevator modernization, and the Stantec infrastructure study. The total amount the state's going to have to invest in this building to get it up to par. And when they're all done, we will still have a building that has mold in the walls. Because of the way the mold remediation is being done, there's some interstitial space that they're not remediating, and so there will still be mold left in the walls, which is an ongoing concern for BOE because mold is an organism that grows when water is applied to it.
Yeah, well, and the leaks. Did we fix the leaks yet, which started all this?
So far, there still was this last storm, the January storms. We did have some window leaks, and I believe they did some repairs to those, and I think they have a few things they're still going to do this summer. Yeah, but they have to wait till the wind stops blowing to drop a platform over the building.
Back to the problem of, wouldn't it be cheaper to repair it if everybody were moved out into some normal place? I just can't quite figure out. I take it this isn't on the governor's list of things to sell. It would be nice if it could be.
It is not.
Nobody would take it, huh, except us.
Well, the problem you got right now is if the mold situation, just like asbestos and everything else we've learned, there's ways that you can deal with it, just like you got the problems on school sites, things like that. But the trouble is when you start litigating and all of a sudden you've created a whole bunch of other problems that is really decreasing the value of that asset. And so, what we need to do is we got a problem we got to fix regardless, okay, whether they're in there or not, and we need to figure out a best way to go about it. I wish we had more money. Then, yeah, it'd be easy. My other suggestion, maybe I'd call CalPERS and swap buildings with them. They built the thing.
Works for me. They ought to at least pay some of the cost. I don't know. Somebody ought to be paying for this, and it shouldn't be us, and it shouldn't be the employees. And I just can't quite. It shouldn't be the taxpayers, and it shouldn't be the employees. I'm just really don't know where to go. And we're losing money every time you try to do something with this building and don't get it done, or every time you move people, we're losing a week's worth of productivity. And in this department, in this environment, that's costing us X million dollars a week. I mean, that's real money that isn't being brought into the state to help us with our deficit that's already owed us, that isn't a new tax, that we don't get every week that we spend moving people around. And I just...
Well, there's
and
actually...
I'm worried about how many... Has somebody done the analysis how many workers' comp suits we have since this all started?
We have... I believe our last count was 77 pending comp suits, but that included 9 elevator claims, I believe.
Just over the last couple of years, or
the elevator claims were over the last couple of years. The suits had been filed, I believe, after the September 07 date. I'm sorry, I don't have all that data with me, but
okay.
it's in.
Well, yeah, I mean, I think it's another cost that nobody adds in to this madness. At some point, there should be enough costs that getting rid of the building would be worth it.
On the revenue side, though, that money's really, it's delayed in collecting. It's not like you lose it. There is some time value of money, maybe, but...
As we discussed with the furlough, it's the same sort of situation. Some of it is delayed and some of it is lost because of statute of limitations and businesses going out of people going out of business. When we get to that case, it doesn't mean we're always going to be able to pursue it. The sooner we get to it, the more successful we're going to be. So we've estimated, with the furlough, we were estimating like a 30-70 split, where about 30 was lost, or 30 was delayed, or 70 was delayed, 30 was lost. But what we're finding as we're trying to ramp up to go after that money, there's always new things coming in. So we're actually thinking the loss may be a little higher than what we had originally estimated.
But that's based on the assumption that if we get them now, then we'll get them before they file bankruptcy or leave. But
or before statute of limitations goes out.
If you did your action now, it could force them into that anyway. So you're kind of working into the assumption that they would still survive. I mean, one way or the other, you'd get them before they escaped, right? Is that what you're looking at?
One hopes that we would be able to recover the state's funds while we still have a viable mechanism to do so, but it doesn't always happen.
Chances are, if they were viable, you wouldn't have to worry about going after them.
This is just an update, but it is just the most eternally frustrating. So is there any money in the budget this year that's for this project, or this money's already been allocated?
The BOE has not been allocated any additional funds to help cover the costs for these things. We're having, we work with the Department of Finance to identify money to be able to pay for this. For the past couple years, since the bonds had not been sold on the building, a portion of the part of the way we're paying this is we've received authority from the legislature to use what would have been our bond debt service payment to help fund this. The other ways that we've been funding the remediation repairs is when we get to year end, if we have any money left in our operating budget at year end, rather than having it revert to general fund, which is typically what we do, we've been redirecting that money to help fund these ongoing costs while still paying full rent.
I mean, if we were renting from real people, you'd at least get to write off your cost of the.
I don't
know how we do that.
If we were renting from a private company, I would hope we wouldn't be in the building any longer, and we certainly would not be paying their remediation costs.
You certainly wouldn't be paying, or you could at least take it off your rent. And that's what's so frustrating about this. I mean, I don't know how we create that kind of accountability for DGS and whoever's good idea it was to buy this building in the first place. Did nobody do an inspection of the building? We did, huh? Didn't help. So who are those inspectors? I don't know.
I'll defer to DGS.
No, it's all right. I'm beyond it. I just so frustrating. And I was hopeful that when Bill Leonard became some secretary over DGS, he'd find a solution. But okay. Well, we'll just keep watching and hope that this gets fixed before more people get sick. And at some point, somebody's going to have to come up with a plan for where these people are really going to move when somebody sells this building. Once you're done with it and somebody gets rid of it, somebody needs to start the infrastructure planning. I won't be here. Somebody needs to start the infrastructure planning for when these folks are going to move to a real building that's theirs, that's built to fit them, and get rid of this thing to whoever wants to knock it down to do something useful.
Actually, that was.
Wouldn't it have been cheaper to knock this down about 5 years ago?
Hindsight's always 20/20, but actually the thought about them having their own building is how we got into this one. So, I mean, that was the concept at the time that this was bought. So.
With what?
Well, the BOE would set them up as a self-contained building, and it would all be nice, and that's what happened here. So when you say let's go get them a building fits their needs, supposedly this was it. So back in 1994.
In 94, yes. There's been a few additional taxes and fees brought in for us to administer since 1994.
But we didn't build it. We just acquired it. All right. Moving on. Public testimony. Sorry.
Good afternoon, Madam Chairwoman. Tamika Robinson. I'm an employee of the Board of Equalization and also a representative with SEIU Local 1000. And the members of Local 1000 understand the state's current fiscal crisis. However, we ask that our members be moved out of this sick building and money stop being wasted on superficial repairs. The longer that the state waits to move our members out of this building, the productivity and the revenue that they could be collecting is lost.
Well, that's it. What if we took the $28 million that they haven't spent on remediating it, and couldn't we lease a building for a year or two for that?
I would just add that BOE is talking about the difficulty and the costs they incur moving from floor to floor, just one floor at a time. If we were to move them out of the entire facility, I think it would have a very serious impact on tax collections.
The plus of moving out of the building is it'd be a one-time move.
Yeah.
You know, so you move out, you're done, you're in the new building. What we're doing now is we're moving people. We move them off a floor, we move them back on a floor, we go move the next group off a floor and back on a floor. So,
and you're still,
it would be,
and the building isn't being cured. I mean,
yeah, it would have an impact of a one move versus back and forth moves.
Yeah, and I wanted to follow up on the fact that the board has worked well with our members, and they actually, we don't fault them at all for the chaos that is the sick building that we live in. But we have had, like Liz said, 77 workers' comp claims, but that's not taken into account the members that have called in sick, that have been stressed out by having to pack up their desk, move downstairs, then repack their desk, move back upstairs. And I just think in the situation, the current crisis that we're in the state, we need to move our members out so they can get back to the work of collecting dollars for the state.
yeah, I guess the problem is that we still have to repair the building even if we want to sell it or try to unload it on anybody else. But I don't know how we have the money. I mean, I think we could do it if we just abandoned it and said, we're taking the money that you're repairing with and moved, but we'd still have to pay rent, and then we'd still, somewhere along the way, we'd still have to do the repairs. I think that's been the problem, right? Is that why we're in this mess? I mean, somebody could have solved this 3 years ago.
Yeah, but you know what doesn't make sense about this? If this was the private sector right now going through all this, I can guarantee you that one of our state agencies would be shutting them down or something, and yet you have this. So I don't know what's going on out here in California.
EPA, where are they?
Well, but I mean, you can't have it both ways. I mean, if there's a problem, there's a problem. If there's not, then everybody needs to get off it. Okay, if there's a way to fix it, then you fix it. But I want one of our agencies who are responsible for this stuff, I want them to take a look at this, come to the conclusion, just like they would if it was the private sector. Because somebody, either the employees themselves are just making a big ado out of nothing, there's a perception problem, and that's what it really is, but we got to deal with it anyway. I can't even sell that asset if I don't deal with this problem, and I need to determine if we're dealing with fact or if I'm dealing with just perception. And get one of our state agencies, the Department of Toxic Control, Department of Health, I don't care. They would be on somebody in the private sector own this building right now with all the complaints I'm hearing. They'd be all over them, and if there was a real problem there, they'd shut them down. They would red tag it or something. And so I think we need to go ahead and go that direction then. And let's find out once and for all if we've got a real problem or if it's just a major inconvenience. So I'm getting tired of it. I've been listening to this for 4 years now.
I know. We're all so tired of this. All right. So your point was, I'm sorry.
I was just going to say that what we're hoping is that the fiscal study that is due out here on June 15th,
the one that you're getting from CSU and UC,
will provide a better snapshot as far as what the asset is actually worth and what are some options, including possibly private-public partnerships with the private sector to help the state address what to do with the building.
Well, let me tell you what you're going to have a problem with because of everything that's happened right now. Whoever buys that building, okay, they're going to be concerned about it being labeled a sick building. Okay, and they're going to look for the state to have ongoing unconditional liability for that because they aren't going to want to assume that liability. So that's where the problem is. That's what's happening here right now. And if we've got a really sick building there, then yeah, we should just tear it down and forget all this nonsense, because there's
Sell
going
the
to be
land and let somebody
there's
build
going to be a
something.
horrendous liability here. So we need to figure out, is this just a situation where people are just not happy?
Or not
okay, and we've
remediating
got a
appropriately.
perception problem, or do we have a real problem? Because if we got a real health problem there, you can't just go sell this and then just let nobody else is going to assume that
It's
liability.
like a brownfield problem.
Absolutely.
Yeah,
And
well, maybe
only worse. But
two things. One, we do need that study. I think that's great that the board went out on their own and got the universities
Yeah, no,
as
I
an
agree.
independent to kind of give us some sense of what this place is worth, because obviously finance and DGS weren't able to do that.
we need
So
to know the facts, because you
so
can't base this on just
that's
assumptions.
helpful. And the next thing actually, your suggestion isn't a bad one. Maybe we ought to contact OEHA or somebody and see what they think. At least just sort of get them to go look at it. And I don't know. But it's all right. So we'll keep it open. I mean, obviously, there's nothing to be done right now. It's just the annual update on the status of the world. Okay. All right. Franchise Tax Board.
Thank you.
Well, that cleared out the room. Okay. Franchise Tax Board, page 11 and 12 are similarly overviews. I understand, although it's not on the agenda, is it on the agenda, the finance letter? There's a finance letter taking out the positions for the homeowners and renters assistance credit since it no longer exists?
That is correct.
Accurate? Okay.
There is some remaining on this balance to represent the administrative cost that Franchise Tax Board has. It's overhead that was allocated to that program, but there is a fair amount that is going away.
Okay, so that will be a slightly less expenditure or whatever. Okay. If you don't have, you can comment on the first couple pages if you want your overview, and then let's go to the tax gap measures issue.
Sure, absolutely. My name is Jeannie Harriman, the Director of the Financial Management Bureau. To go into the presentation here, we are asking for an increase as displayed here of about $87 million. $53 million of that $87 million is the restoration of furlough money that was taken out of our budget, which is a substantial portion of that. The rest is budget change proposals primarily related to growth in our accounts receivable staff, as well as facilitating a request to go back and try to recover some of the money that Franchise Tax Board was not able to retrieve in 910 because of furloughs. Additional funds of large amounts related to the EDR project and the tax gap positions that we have on board as well.
Okay, that's on the overview stuff. So you want to go ahead to the page 13, furloughs issue. $6.5 billion.
All right, issue 1 is the employee furlough reduction proposal that we have forward. This BCP requests $14.7 million for 1011 only to help us eliminate critical backlogs that were caused by the furloughs, primarily in our pipeline, which is where we process the tax returns and key and critical data that the rest of the compliance programs need, and as well as increasing our ability to address collections accounts that we have not been able to get to, or opening audits that would otherwise not go open. Approximately $9 million of this $14.7 million is related to overtime for permanent staff members, and the remaining $5 million is associated with permanent intermittent staff, retired annuitant, and seasonal clerks that we would hire that are familiar with our ongoing programs to minimize any training costs that we would need to incur to get these folks up and running. These resources would help us recover $50 million of the $465 million that is a permanent revenue loss otherwise. It is important to note that this BCP also requests that Franchise Tax Board be exempt from any ongoing furlough programs.
Yes.
If it is not, then it is important to understand that that $465 million revenue loss will continue to increase while we are on furloughs.
I got 89. Okay, I got to start adding these up. Did you score it that way, finance, finally? I know you've been scoring it that way last year.
Checking my figures here. Yes, that corresponds with the revenues reductions that we scored associated with the furloughs.
So 465 plus 89, and what was I saving from the furloughs?
The general fund savings are in the neighborhood of $1 billion.
But you just admitted half of that's already been lost by virtue of these two actions.
Correct, but the legal rationale.
And the other half has been lost at least in just litigation costs, right?
I don't know what the litigation costs were, but the rationale for doing it, for furloughing the tax boards, as we indicated before, was that equality of treatment for all employees. If we exempted the employees of the tax boards, it could have led the courts to dismiss the furloughs altogether, which would have jeopardized the entire $1 billion.
Which, of course, they did anyway, and we still lost the money. Those furloughs have been sustained to date that I'm aware of.
They're still all under appeals, I understand.
Well, yeah, because we lost all the lawsuits. I mean, we're at $500 million revenue loss, plus all of the loss from the federal funds and all of the folks that were federally and specially funded. That also adds up. And I think whatever projected savings you had last year have been completely, I mean, last year I thought it was going to be minimally eroded. Now I'm convinced it's been completely eroded. And one of the reasons we're in deficit is because of that decision to not approve contracts that would have gotten real savings of $1 billion had somebody had a contract that was actually approved. That proposed real savings that could have been $1 billion in savings that would have been real savings instead of savings that are now going to be blamed on everybody as somehow, things the legislature couldn't achieve when it was the administration did them independently, solo, without legislative sanction. And it's just so frustrating. All right. So you think you can make up $50 million maybe if we get to you fast enough? I mean, we asked the governor in February also to take back these furloughs when everybody already knew what these numbers were. And we asked them, and on a bipartisan basis, the legislature passed bills that said, stop doing furloughs for federally funded, specially funded, and revenue-generating employees. That bill was vetoed.
I would just respectfully submit that if we had, in fact, ended the furloughs in February, we would have had to dismiss the entire $1 billion in furlough savings that were scored.
Yeah, but we'd had $1 billion in real money, right? I mean, why would you have to dismiss the furlough savings for the general fund when you restored the special fund and federally funded folks?
Again, the rationale was that if you're treating state employees in the same classification differently, that would lead the courts to throw out the furloughs for everybody, including the general fund positions, which would have eroded or totally eliminated the entire $1 billion savings that we had scored.
But didn't one court find that
those rulings
there was no justification for doing federal and special funded furloughs?
The rulings are still all under appeals, we understand it.
I understand that. I'm asking what the trial court decision was. And my recollection is the trial court did not say it was because they were unequal. It said it was really stupid, just like we said, to do federally funded and specially funded employees.
I'll have to refer your question to the employee compensation specialists who are more knowledgeable about that, and I will do that.
I can try to take it.
Sorry. I mean, there's been so many lawsuits. I'm sorry. I can't keep track of them.
Yeah, Michael Cohen with the LAO. There are tons of lawsuits, and at this point, though, none of the lawsuits have actually stopped any component of the governor's furlough program. But
we're going to owe, what is the projected liability of what we will owe if all the existing trial court decisions were to be upheld?
If we end up owing back wages with penalties, it certainly will
be more than the $1 billion in savings?
Far in excess of the $1 billion. And then you'd add on the revenue loss and so forth. I'm not sure I get Finance's point that if we stop the furlough for certain employees, that we would lose the whole $1 billion. First of all, most of those savings have already been generated at this point. Now that we're in April and or May, but even so, certainly it might hurt our position in court, but it wouldn't all of a sudden mean that we had somehow relented and that we
And that is exactly what I was referring to as what her legal position.
I'm sorry?
I was referring to the fact that it would jeopardize our legal position, as Mr. Cohen indicated.
I would have liked to see a legal opinion that said that in February. I mean, now it's basically useless. I mean, May, it's sort of not helpful. I mean, 2 months would be nice, but it wouldn't kind of probably do much. But had we done it when the legislature passed a bill in February, it seems to me it might not have been inappropriate. Anyway, so the potential liability here, I had somebody working on the cost of the lawsuits themselves, because somebody ought to either be figuring this out or settling them and doing something, and the liability that we're facing. I mean, that will exceed any theoretical savings.
The potential liability will far and away exceed the legal costs. While the legal costs, I don't have a total for you, but they're going to stay in the single digits of millions of dollars, where you're talking about hundreds of millions or billions potential liability in the worst case scenario.
All right. Maybe it's enough to pay for Fiscal or something. All right. All right. Anyway, so on the question of actually restoring the positions, which is the item before us. So what we're looking at, let's see, you're showing the loss, but you're showing the revenue. We are, again, in fact, showing the revenue finance?
That's correct. We did score these revenues in the governor's budget.
Okay. We scored the losses and the projected. Yeah.
Correct.
It's not enough, though. But you're saying it's going to take time to ramp up, right? So we're not getting full value right away.
We have the staffing existing right now. The majority of this is overtime funding, so there would be no ramping up associated with that. We believe that we can effectively
This will be
do
only
that.
after July, though, right?
After a budget passes is typically when we would begin to spend this fund.
That's problematic. Oh, yeah, the governor vetoed our continuous appropriations bill, too, didn't he? So people can't get paid to collect this money in July?
I'm afraid I can't speak knowledgeably on that.
Am I right about that? Does anybody else remember? The bill we had to allow employees to get paid in July?
I can't remember if it went to the governor or not, but it's not in place right now. So you have no sort of special provisions for any piece of the budget at this point. Past July 1, it would just be the normal things that get paid.
I don't know how they get paid overtime. That's what worries me. All right, but for the moment, we will approve, I think, on a 3-0 vote, this particular item. But I think we may need to revisit these discussions. We may revise at least to make sure we're getting what we need. All right, tax gap enforcement, page 14.
Christy Trikar with the Franchise Tax Board. Our tax gap enforcement proposal, we are requesting $5.7 million and 81.2 positions to continue with our existing tax gap enforcement activity. The first initiative is associated with increasing compliance with non-resident withholding. We are requesting 5 new permanent positions to pursue outreach, education, and discovery activities in industries where we have uncovered a lack of compliance. The specific industries we will target include property management, royalty payments on franchises, information technology, temporary agencies, and trucking. We have found that non-resident taxpayers have a filing requirement, but we have no returns on file, and we have received no remittances. The second part of this proposal are positions tied to our compliance enhancement measures, and we are requesting the conversion of 62 positions from limited term to permanent status in order to enable FTB to continue the following initiatives. The first is using a vendor contract to purchase addresses to send notices to non-filers with bad address. The second is using additional data from the IRS information return master file to identify additional non-filers. We are also requesting the extension of 14 limited term positions for an additional 2 years to continue our DMV luxury auto registration pilot. It is estimated in total that this proposal will result in revenue of $114 million in 10-11 and approximately $119 million in 11-12.
We appreciate you coming up with ways to do this. And this is something we're actually already doing, so we know it actually produces the revenue because we're basically extending things that were done on a limited term basis to see if they work.
The only 5 new positions are with the to go into additional industries for non-resident withholding.
Non-resident withholding. Senator Dutton.
Yeah, I'm curious about the status of a case against a Gilbert Hyatt. Are you familiar with it?
I cannot speak to that case.
Anybody familiar with it? It was a California resident who I guess moved to Nevada, and FTB determined I guess he had $6 million in taxes that he should have paid. We spent about $40 million trying to collect it, and then we got a harassment judgment against us for somewhere around almost $500 million, and we could sell it for $3 million, and I guess it's under appeal.
Yes, Brian Butler, Franchise Tax Board. That is correct. It's pending appeal at the Nevada Supreme Court. So briefing has been taking place.
Now, is that part of this tax gap enforcement policy, going after non-resident and so forth, or?
Typically, we are going after non-resident under this proposal that own real estate in our area in California and rent it out, but do not file a California tax return. So
when we get a potential liability like the one we just talked about, is that reflected anywhere? Because so far we haven't been real successful.
Right. Typically, you're referring to a residency audit, which is much more different and complex and subjective than these types of examinations are.
Actually, what I'm really concerned about is the judgment decision that was made. I've heard a lot of criticism about judgment decisions regarding furloughs and everything else, but I'm concerned about we got a $6 million tab we're trying to go after, and we've spent $40 million. We got a judgment against it. At some point, does it, I mean, somebody's got to say it's not worth it. Or,
where's the lawyers that are like not settling these cases?
I don't understand why we would spend that kind of money. We're just making the judgment call to say that we're going to keep going in this direction. And how long, and this case has been going on for years.
Yes, it has. And we are in litigation, as Mr. Putler noted. There are certain things that we are barred from discussing, unfortunately. We have attempted to work with the taxpayer involved in that lawsuit to minimize the risk to both us, both himself and to us. Those negotiations have failed, and we continue on this path to protect ourselves. We do not believe the judgment against the state of California is appropriate or correct, and we do continue to fight that in the courts. And at the end of the day, if we do prevail on that, attorney fees, we will be asking for reimbursement.
Right. So what happens
but
if
at
you
this
don't
point,
prevail?
it's just looking for the process to continue.
So what happens if you don't prevail?
That is a possibility.
Yeah, but what I'm trying to get to, $6 million of taxes, we spent 40, you've got a judgment now because they're claiming that we harassed them. Okay, and the courts have also held up that decision so far. I just don't understand the judgment call here. I don't, at some point, is it just that you're just trying to wear them out? Is that what it, because this would be indicative to me of the attitude or philosophy about the other decisions you're making with other taxpayers. And I'm just concerned about that because we're dealing with huge deficits, and there's nowhere is that potential exposure to liability. I don't see it listed anywhere. And so I'm just curious, is there more cases like that, maybe a lot smaller, but that I don't know about? I mean, I'm just a little concerned, that's all.
Right. Yeah. I'm not aware of any other cases pending of that magnitude or on a smaller basis. Typically, when we find an adjustment that we believe is correct, we work with the taxpayer to make sure that they understand what our position is, give them a chance to respond and refute that. Based on the documentation, we will proceed either way. We'll either withdraw our proposal or we would issue a notice of proposed assessment, at which point the taxpayer then has a right to protest, which is subject to another review. Again, assuming that our position is upheld, then the taxpayer, of course, has the right to go to the Board of Equalization. So it is a process in place, and I don't know that any of us have seen the magnitude of a case such as the example that you're citing in the Nevada cases right now.
Is it because this is some precedent? I mean, why would we spend more to pursue it than the original tax was worth? What is the issue here? Does anybody know? I've heard, is it a precedent? Is it a problem because this would set a precedent for I don't know what?
Yes, Brian Putler again. The thing with the case that's pending is it's not a tax controversy case. It's actually a tort case, if you may remember, where the taxpayers actually sued the department for tort, I think claiming that the audit tactics used by the department were inappropriate.
But the audit was a result of trying to go after a $6 million tax liability. At least that's what I was
Correct.
told.
That's where, yes.
So it
that's
started with
how
a
it started.
collection. It started with with an allegation of a tax owed, and it led because of the procedures or however it is. Somebody's determined that the Franchise Tax Board has harassed this individual, and that's where the problems are. I mean, at least that's my understanding. It's your methods by which you went about that. Some courts, anyway, found that you were out of line.
Caused the tort claim.
And that's what the allegations in the lawsuit are. That's correct.
But this was all about trying to collect the $6 million. This is how it all started.
That is how it started, right. But I just wanted to make sure that you all recall that it was a tort case. Yeah.
But that's even more frustrating. I mean, if it's a tort case, then I get why it's harder to settle because nobody wants to admit they did anything wrong. But
or the plaintiff has to be willing to settle. So I can't. Obviously, the Attorney General is the department's lawyers, and there are private lawyers representing the department, and I'm not able to speak to the case. But
yeah. But we never collected the $6 million either, right?
That issue is presently pending.
That's pending in some other court?
Board of Equalization.
So he still hadn't gone past the tax appeal stage of the Board of Equalization before he sued us for harassment?
That's correct.
That's correct.
I see. Okay. All right. Well, that explains it.
I believe as a contingency of his litigation on the tort, he demanded that we hold resolution of the tax controversy until the tort was resolved. And so with the judgment rendered against us, we again picked up the tax controversy case, and we are now managing that case.
Oh, I see. But what happens to the tort case if you win the tax case? Oh, well. Anyway. That's very interesting. All right. Someday we'll get a separate legal briefing on this, but not today. All right. We do have some other legal issues on page 22. That's why I was looking for. I knew there were some other ones where there were these other lawsuits. That's what I had thought. I didn't remember which one you were referring to, but these are other related ones. All right. But let's just go back to, let's just go in order. We'll go back to page 14. So we're back to the 81 positions. None of them were used to harass this taxpayer. Just tell me that.
Correct.
Okay. Good. All right. On that basis, or will be, whatever. On a 2-1 vote, that matter will be approved. All right. Accounts receivable.
This proposal is requesting $8.2 million be added to our budget, funding 111 positions, which is anticipated to generate in 10-11 $52 million and in 11-12 $111 million. Primarily, these resources are going to be addressing the continued increase in our accounts receivable. We have noted increases in the last 3 years, and we would expect increases to continue for the next 3 to 5 years. Primarily, those increases have been because of the economy. This year, with the implementations of furloughs at Franchise Tax Board, that also has stymied our efforts to address this growing accounts receivable balance.
What does that mean? Accounts receivable. In other words, this is money you've
money that
assessed, but nobody's paying because they're broke, or?
Or yes, we've either assessed it or the taxpayer has filed their return without paying.
Oh, yeah, filed it and not sent the check.
Yeah, so it's any tax liability that is pending before the Franchise Tax Board that just simply hasn't been paid. The accounts receivable balance also includes installment arrangements that we monitor and so forth. So the resources will be used to continue to try to address the increase in accounts receivable, which is an immediate cash infusion into the state. Much of these balances are recognized as owed by taxpayers, particularly when they file their tax return and just do not pay. Those are just a straight collection. And a lot of times when we receive those in our accounts and we issue a bill, that is when the taxpayer pays. But without being able to do that, a lot of times the taxpayer will continue to wait until we
somebody
send them
sends
a bill. Yes. These resources are also being used in anticipation of the implementation of EDR. With EDR being implemented and us expanding our workloads, that would also generate.
EDR, translate.
The Enterprise Data Revenue IT project that we are doing. It's, I believe, issue 5 that we'll be talking about soon. But it's our IT project that's going to help us substantially increase our revenue for the state. So that is scheduled to be in line in the next several years as well, increasing our workload. So again, we're trying to get our accounts receivable down to the lowest level that we possibly can, considering the resources we have, as well as the economy, the taxpayer's ability to pay to get ready for EDR. It has been recommended that these positions be granted on a limited term.
Limited term, yeah.
Limited term typically somewhat hand-ties us in our ability to retain employees, and we would continue to have that concern even with the high unemployment rate. On average, it takes about 6 months to get a collector up to speed to generate the revenue without extensive oversight or additional training. And a lot of times we get limited term hires in and they immediately start looking for another job. And so that jeopardizes our ability to get them up to full production, and we're constantly in a training mode with this. We would suggest, if you are interested in retaining oversight, that perhaps you could put a reporting requirement for us to come back in 2 years.
The issue wasn't oversight. The issue is whether this is a phenomenon, this workload is a phenomenon of the warped economy, and that workload might go away and when the economy improves, that people would pay their bills because they wouldn't be furloughed or otherwise unable to do so.
Yes.
So, I mean, that's the limited term is more, it's not just an oversight question. It was really a question of, is this workload
permanent, kind
of based on, foreclosures and furloughs rather than on something that's an ongoing problem.
A couple points on that. Our estimates, as well as other folks that have looked at the economy and when California might recover, has suggested it'll be another 3-4 years before the economy gets back. Again, I mentioned EDR. In our EDR platform, we have an extensive number of collectors also suggested to come on board in a couple years. If we were to get these and we didn't need extra resources, then we would simply eliminate those collectors from the EDR VCPs that would come in the next several years. So, and of course, if we ever do, when collections do start to come down, and if we do get overstaffed, at that point, we would certainly put forward a negative VCP.
I mean, does this go at all to this issue that we've gone around before, and maybe we didn't do it very well because everybody got all excited about it. But it's this question of better withholding. Would that improve on this at all? We played around with some different versions of businesses, and independent withholding, a smaller amount certainly becomes awkward and is difficult for businesses to deal with cash flow. But is there any chance that getting 1099s to you would help people? I don't know, be able to collect or?
There are discussions going on right now. I assume you're referring to the independent contractor withholding.
Yeah, not so much the actual thing that was proposed before, but I've been trying to think of variations on that theme that would allow you to know what you should be collecting.
Right. The tax gap statistics do show that with withholding from your wages, et cetera, those folks are more likely to be in compliance simply because they do want to get their money back at the end of the year if they've overpaid. But there is some ability
and at least you've paid most of it. That's if you're going to be under, it's not all under, it's only partial under.
Right. So, but taxpayers can also claim extensive dependence on the withholding and under withhold from that matter. So it may help a little bit to adjust the withholding or what have you, but the 1099 universe, which typically is reliant on another party to recognize they have that filing requirement with the 1099, and again, I'm speaking outside of the banks or the dividend payers that know their requirements. And that's where the independent contractors come in. And I think you're aware that the legislature's been, over the last several years, talking about that extensively, the pros and cons of that.
Yeah, I'm just trying to figure out a way to do it that isn't as difficult for all the businesses as the independent withholding was. But to get you the information. Do you actually get those runs from the 1099? I mean, if I'm a small business or I'm a subcontractor or a contractor that does subcontractors or whatever, I file a 1099 with the federal government, but they don't file a 1099 with us, right? We have to just wait and get a tape or something? Is that how that works?
We do get any 1099s that are filed with the IRS. We do get them. Yes, we do get them from the IRS. There are some taxpayers.
You get them from the IRS, though, not from the employer.
Some situations the employer gives them, but by far and most, the majority of our 1099 reporting is done through our exchange agreement with the IRS.
And does that work effectively to know?
Certainly, there's a substantial amount of revenue, per se, associated with that. Our non-filer program relies extensively on that information. Our audit universe is also using that data to validate the returns as they are filed, that they're correct or that they've underreported or overreported on their returns.
Okay. All right. All right. Is there any thought 2-year, 3-year, forever positions? With 3 years, I don't know if that matters. Would that make it easier to recruit and then people would still? Or would it matter? Elio, what's your thought?
While it's certainly true, it's harder to recruit with limited term positions. It's a good way for you to, have the check back. Plus, I mean, in the case of hiring collectors, if they're going to be looking for other jobs, it's probably going to be within franchise tax boards, other collectors. So people tend to kind of move through these positions up to other positions, and it may save some training time on permanent positions. So we don't see a problem with the 2-year.
All right. Senator Dutton? Neither? Or no positions at all? No limited term? No permanent? Which? Oh. Okay. I don't know about that. Let me see. What is this? But finance, you're going to score $53 million if I approve these and minus me $53 million if I don't?
That's correct, Senator.
Okay. On that basis, Senator Padilla moves to approve the 2-year limited term on a 2-1 vote. Senator Dutton, I agree they should be able to do that, but finance won't score me the $53 million. When you get them to do that, then we're back on. I'm happy to avoid the positions if I could get finance to score the revenue.
I can score any of this stuff any way you want it to make
but finance is the only one that counts. It's the problem on the scoring. You don't let us do it.
So far, the bottom line hasn't really been.
It hasn't worked. I get it.
The current way we're doing it hasn't worked.
I'm with you, but I don't know how to make the budget balance into the circumstances.
Wasn't it Einstein or somebody that said somebody's crazy when they keep doing the same thing over again?
Expect a different result?
Something like that, and expect a different result.
There's that. Okay. It's just, and when you give me another entity that can do my economics, I don't have to rely on finance. We'll be good. Okay, page 16. You got more folks for a pilot program.
Yes, this next proposal is we are requesting $847,000 and 11 permanent positions to implement the Federal Treasury Offset Program. The Federal Treasury Offset Program offsets federal income tax refunds and payments on delinquent state income taxes. Currently, 40 states participate in the Treasury Offset Program.
I was going to say, this is the one. Why are we the only guy in the whole world that never did this before?
Well, in the past, we believe that our voluntary compliance measures were less expensive and were effective. We're choosing to participate now because of our growing accounts receivable balance. And also, while we did do a pilot, we also discovered the benefit of that we didn't look at or didn't realize before, that many taxpayers, when we do send them the intent to offset notice, they end up paying their liability without and getting their federal refund in full.
Imagine that. Okay. Senator Dutton, any thoughts? Questions? Okay. On a 3-0 vote, that will be approved. Enterprise data. Okay, here's your data center thing.
Yes, here's the EDR project I was referring to before. This is a significant technology undertaking that we have begun in the last several years.
Those always scare us.
This BCP is for the second year of the program itself. Currently, we are requesting $6.9 million associated with 40 positions, as well as consulting costs necessary to begin and implement this project. The aim of the EDR project is to improve the effectiveness of our filing processes. When the returns come in the door, there's extensive processing that goes with it, and that will allow us to maximize the data coming in from these returns through all of our compliance programs, thus substantially increasing our ability to detect noncompliance and ultimately result in additional revenues for the state of California. Revenue is projected at $3.7 billion over the life of this project. By 15-16, we are looking at $900 million annually into the state coffers because of this functionality we're looking to get for Franchise Tax Board. The good thing to note about this program, even though it is very expensive and being heavily monitored, we have structured the program in such a manner that each year we are generating revenue from certain components within our own work to cover the cost. So there actually is no out-of-pocket cost to the state because of the revenue that we're generating because of backlogs within Franchise Tax Board that must be cleaned up before this project can be implemented.
Okay. Are there any, have there been any technology issues or consulting or RFP or any of the normal problems that we have with any technology project? Finance, LEO, anybody? We're not having visions of child support or?
At this point, our project is on task. We are under procurement right now to solicit a vendor coming on board.
Oh, you haven't done that yet?
Yes, and we're working closely with Department of Finance, OCIO, DGS.
Yeah, it's the OCIO piece, I guess. I'll make sure. Yeah. So you haven't done it yet. So we aren't in the middle of this. It's not started yet.
Correct. We're in progress to get a vendor on board to talk about what the solution is. We put our requirements out on the street.
I see.
Vendors are responding to those to tell us what the solution for Franchise Tax Board might be.
That's a good process, finally, for a change. Okay. Okay. All right. On that basis, is there any objection? Yes, Senator Dutton.
A couple of questions. Right now, we're generating revenue right now, right?
Correct.
What we're concerned about is the upfront cost and how that comes into play. So what is the upfront cost? We're a little foggy on that.
So in essence, how we've structured this project is in our business entity section, we have extensive backlogs because of the complexity of the returns that are coming in during the filing process. Mm-hmm. So in each of the years that we put forward BCPs on this, we've asked for resources to work those returns for two reasons. One is to generate the revenue that is sitting there. A lot of times taxpayers will incorrectly add a line up. Mm-hmm. So we're going after them to let them know of their mathematical error. So we're doing it to cover the cost of the program. Secondly, we're doing it because in order to get the biggest bang for our buck on the EDR system, this backlog really needs to be cleaned up and the data put up in our system. So
I don't really have any trouble with the project. It's the timing. And so what I'm trying to do is there's a certain upfront cost that I'm going to have to do this system. And there's no doubt in my mind long term it makes sense. But we are collecting revenue now. So what's my net for the first year? The year of implementation, are we getting more revenue the first year, or is there a recovery period?
Okay. I'm going to ask Carlos Samaripa, who is a key individual with the EDR project, to come on up and address that question for you.
Good afternoon. Carlos Zamaripa, Franchise Tax Board. Question was about revenue.
Well, what I'm interested in is that to do this, that there's a cost associated with the upfront cost of putting in to do this. Right now, we've got a procedure that's in place, and we are doing it. It may not be as efficient, may not be as, but we still are doing it. We are collecting revenue as a result of it. To do this revenue project has an upfront cost, and because it's only a period of time to recapture that upfront cost before it actually pays for itself, and I'm trying to get an idea at a time when I've got a $20 billion problem, what's my upfront cost, and how does that compare to what I'm going to end up? Am I still running into a negative then? Because I think I probably am, and that's what I'm trying to ask you. We weren't clear on what the upfront costs are.
In a typical project, you would be running a negative, but in this one here, what we did is we structured it in a way so that we would be generating revenues even in the early stages of the project. This project doesn't begin with the contractor until July 2011. It would stay on schedule. So these early upfront costs are about because for one reason, she mentioned the returns that are backlogged, and we're cleaning those up, and as we accelerate those and correct them, we're generating revenue. EDR will address those system problems. And so this project is also benefits funded. That means you don't pay any contractor any compensation until that system produces benefits. So the contractor that signs up for this has to structure their implementation in a way so that benefits are generated as early on as possible to cover their upfront costs. So it works out a net over the 9 years that we estimated the cost and the benefits for this project.
Well, I know
each year is a net.
Yeah, I know. Right now, I'm trying to figure out what my current year problem is going to be.
Current year is just addressing the backlog. The reason this needs to be cleaned up is because these resources then could be freed up to work on the new workloads. See, EDR will produce some new workloads that we can't do.
But the revenues that you're talking about, aren't those reflective because of the adding of staff?
Yes, they are. Yes, but the whole scheme is tied together with fixing those problems that are causing the backlogs with EDR. So that'll happen later on.
Okay, so the revenue that I'm going to be generating with the increase of staff, would I be generating that if I wasn't doing this project?
Correct, in the current year. That's correct.
I'd still be generating that same revenue.
That's correct.
Okay, so now what's the upfront cost for the project itself? You've combined the two.
Correct.
Okay.
Right now, there's none.
To make it look at the positive.
Right now,
I'm trying to separate the two.
Okay.
Okay. I understand if you add more people, you're going to generate more revenue, and that's there. But you also have an upfront cost for the system, and I'm trying to figure out what's that going to cost me.
That project doesn't begin until next fiscal year, 11-12. There are no payments to the contractor until it actually produces benefits. So there are no out-of-pocket.
Okay, so
there are no front.
Contract doesn't get there's no cost out of pocket.
Correct.
Until such time as revenue comes in.
That's correct. New revenue.
New revenue.
Correct.
Okay.
It's a benefits funded model.
Yeah. So instead of the backwards way like we do, spending $100 million first on the theory that we're going to save it, they're structuring the RFP is being structured so that the contractor basically bears the
risk.
He's doing the financing, if you will, until it's like a toll road.
Yes,
if what we're being told now is true, we can support it. That wasn't what we believed from before, what we were being told.
Yeah, no, it was confusing to me too, because it's like, well, where's the $234 million? It's kind of, but what you're telling us is you haven't issued the RFP yet. That won't be done basically until the next fiscal year, and that it's the intent of that RFP that it will require the contractor to basically upfront the cost of the project until such time as it is doing what it's supposed to do, and then they can get paid back. Sort of the toll road theory of computers. Is that an accurate description? Anybody? Leo? Am I?
Hi, James Knockbauer, LAO. We got a handout from FTB as part of the pre-hearing for the another coverage of those BCP. And it appears that we spend more than we get in 9-10, but in all subsequent years, it's net positive. Is that?
The agenda suggests that we would put, well, that's last year. That's the current year.
Right.
Current year is possible. Okay. But for the budget year, we would do $6.9 million for 40 positions, and we're supposed to get $20 million for that.
Correct.
That's the budget year proposal before.
Yeah, I'm not sure what numbers the LEO is talking about. What?
Their current year, I think.
Correct, that's right. We have a handout available
it's a beginning.
that shows the revenue streams and the cost streams associated with the EDR project through the life of the project, and Mr. Nachbauer is referring to that. For the current year, the cost of the EDR system, and those are typically internal costs to Franchise Tax Board and then other state agencies that are helping us determine requirements and overseeing our effort. Those costs were at $6.5 million. The EDR revenue generated is $3.8 million, and the reason why that is an actual figure versus an estimate. If you saw this chart a year ago, that figure would have been higher. Why is it lower? Primarily because the budget wasn't passed for quite some time, which delayed our ability to hire those individuals to generate this revenue, and then we were on furloughs as well. So actual facts and circumstances, which we were out of our control, is really what forced us into this negative position in the current year. But we do not anticipate that continuing to happen.
I see. That makes sense. Okay, but what they're saying is in the current year they did show that, but it's due to these other circumstances, and the projections that finance agrees to for the budget year are that we would make almost 3-to-1 on it, basically. So.
Our confusion is that we were looking at the original cost of being 1.7 whatever it was in the first year, and we wouldn't have any revenue out of it. But you're telling me we're not going to have that cost until we start generating revenue.
That's correct.
Right, and so I'm confused because the other I was doing that, so I was trying to keep them separated so I could take a look at them, make sense to me, because now you're telling me something new. I'm going to have to figure out where that schedule is so I can take a look at it. So, yeah, if you could just send it to us. Yeah, I'd just like to. I don't think I have a big concern with it long term based on what we've been told today. I'm confused about what they're now talking about being lower that the LAO just brought up. So, but I'll go ahead and vote for it now.
Okay.
If they'll just give me that information.
If there's a problem, we'll reopen it.
Yeah, just make sure we get the information so I make sure that we were looking at the same. We probably got it. I just want to make sure we got it. So.
It's confusing when there's multiple project versus buying software versus it's where we all get lost.
Yeah.
All right. On a 3-0 vote, subject to reconsideration if necessary or additional information brought to another hearing if necessary. Okay. Oh, firm. We have been down these trails before. I asked staff, okay, here's the actual language from the actual thing, because I think this has been, off and on, there has been allegations that the theoretical language did something. Now, since this bill's been vetoed, it is not pending. Well, or it didn't go. I guess it never went to the governor. But this section, wait. Oh, which part of it is the section that I want? Oh, this is the whole bill. Wait. I just brought it because I think we ought to actually think about which of these are legitimate trailer bills and take sections. This has it all, right? That'll confuse me. Sorry, where's the section that's the actual? Firm piece. Oh, I was my thought, members, I don't, obviously, we probably won't vote on these today, but I wanted us to have it, and I wanted us to look at these in actual language, and if there is something problematic, because some of these things are proposals coming directly from the board, they think would help them. It seems to me they would help them. I'm unaware of any opposition to them. I think they worked out the kinks that at one point there was issues with banks and could they do it or not, and somehow I think the language as it was done in this trailer, which has not moved forward yet, from the assembly, does that. And I just want to see what we can do to move some of these issues along someday. So, yeah, no, we'll hold it open, but I wanted to get the bill language in people's hands. But this bill, just to be clear, has multiple things in it. So I'm going to try to focus on the ones that I think we may have. There may be some that, well, one of them, I mean, this includes the nexus issue, for instance, which is more controversial. But I'm trying to get us to hone in on the ones that ought to be achievable and assist the board in doing their job, right? You want to make any comments, Franchise Tax Board, on this one?
On FIRM, the only thing I would add is this is something that we have been working with what initially had been opposition from the financial institutions.
Right.
But due to a number of amendments that were taken to the bill, the opposition is off the bill. So the banks and the credit unions were fine with it.
Okay, so that's good. So we will look at the language again. Do we still, everybody, hold to the view that it will generate $32 million a year if we can do this, more or less?
Let's see. That's correct. For the first year for 10-11, so we would start realizing or sending out levies due to the new data match 1 year after approval for the funding for the program. And in year one, which for the special session, part of the problem is I'm dealing with revenue that was for the special session bill.
Okay, let's just stop. Let's ask everybody to go out and think of this now as a budget year proposal and think about the positions for budget year and the revenue based on a budget year analysis, right? Being too late to do anything before the budget year at this point. But let's assume it to be a budget year urgency, so it's in effect before January, because that would be, I mean, I guess you could give us two scenarios. The scenario that it's in effect immediately and the effect in July or August or something.
Yeah, so we can double check that, but the way I think it would work is, so 12 months starting from January, the following year, then we would have $32 million for that fiscal year.
Oh, I see. Okay. But that's if we passed it in July or if we passed it in January?
If we passed it in...
Effective January.
Right. Passed in July, but effective January 1.
So if it were effective September 1, would that help?
I think we need to look at this very closely to make sure, because implementation period needs to happen after the budget signs, and I'm not sure how long that goes.
Let's just, in our rose-colored world, assume there was a budget by August 1st, and say, well, but okay. Just let's assume a bill could go into effect in theory by August 1st. That would be an urgency bill passed with the budget in July or something. The question is kind of, would it still take till January to implement, or this bill can be done in a way where it doesn't go into effect till January. If we passed it at the end of August, at the end of session, it could go into effect in January. So that's sort of one way of looking at it.
It's 12 months from funding. Once funding is approved, it's 12 months from funding.
Okay, that helps. Okay. That's fine. Okay. So I was thinking of hiring and stuff beyond the funding is sort of the hiring and all those kind of delays that sometimes happen. That's what I was concerned about. Okay, 12 months from funding, you would expect $32 million based on spending 3? Is that the deal? Yeah. I spend 3. Are we still at spend 3, get 32?
Just put my page away. I'm sorry.
Sorry.
It's... In the first year, what we were anticipating is spending $1.4 million.
Oh, okay. And generating?
And then generating 32.
Oh, good. Okay. All right, that works for me. All right, we'll work with those numbers, but everybody can look at it. We're not going to act on it right now but I think it's worthy of everybody to look at the language as best as we can this week, and everybody, y'all circle and double check all your numbers and such, and be comfortable with that. Right, Finance? Yeah. Okay. All right. Abusive tax shelter, same thing. Finance, FTB, you want to? Which section of the bill is this one?
I have that one. In regards to abusive tax shelters, these various proposals that are included in this bill are very important to put in our arsenal, per se, to address abusive tax shelters. Both Franchise Tax Board and the IRS and other state governments continue to find extensive abusive tax sheltering going on with certain types of taxpayers and certain types of transactions. And these proposals would greatly increase our ability to encourage taxpayers to come in and comply earlier and get into compliance by filing an admin of return.
All right. It doesn't generate a lot, it says here, but that takes a...
Sometimes what we've found with shelters is the tools being on the book themselves are a deterrent, which generates a substantial amount of revenue because it discourages taxpayers from ever entering into these transactions to begin with. So yeah, the revenue is estimated about $2 million on this proposal, which is very small. But again, the deterrent effect has not been included in that.
Oh, I see. Okay. All right, that's fair. All right, again, we'll look at the language. We'll keep this open, but it's one worthy, I think, of review. All right. License suspension. This is the one that would make taxpayers, if you will, it conforms to what we do for child support, correct?
That is correct.
And did the language that was suggested before specifically require you to try to enter into agreements with them? I mean, the truth is nobody wants people to stop working, but one must have some way of bringing it to their attention that they owe money.
Right. So the easy way for a debtor who's contacted, should this become law, to avoid suspension is to call the department and enter into an installment agreement.
So basically, you just send a notice, or you get notice when the person's license comes up? Is that how does this work?
Well, what would happen is anyone who is a debtor that also has a license with one of the many occupational professional licensing boards.
Let's just one step at a time.
Okay.
Debtor would be defined as somebody for whom the tax liability has been finally adjudicated, shall we say?
It is final. It is a final due and owing debt.
Okay, not like just April I sent it in and you say I'm wrong, kind of.
Correct. It's not something pending audit or tax controversy. It is a final tax bill that is due and owing to the state. And at that point, if the person would have to go through a number of steps within our collection system, the last being that they would receive a notice of tax levy so that we would actually record a levy. And if that action, which with many taxpayers is enough to provoke action because they don't want their credit history messed with. So if that's not adequate, then what would happen is we would send them a notice, a 30-day notice telling them that they would be, their license will be suspended. And what we expect is that that will actually generate most of the activity for the proposal. At that point, people would call the department to make arrangements either to pay or to pay as an installment agreement or to pay in full.
Okay. It's a little dramatic, but it works. What's been the experience, maybe what you might want to bring back to us at some point or get to us during the week while we consider these proposals is evidence of how this works in child support? You know what I mean? How often do they send it out, and how often do they end up sending notices of suspension, and how often do they get something for it, and how often do they end up actually suspending somebody? I mean, just a little bit of that data might be helpful for us to determine whether this is undue harassment or appropriate collection procedures. How's that? Okay. Or if there's modifications to the procedure that we might want to think about for taxes versus child support, I don't know. But
Not to complicate things, but I did want to just let the committee know that Assemblymember Eng does have a bill, I think it's noted in the agenda, does have a bill that has had some substantial amendments taken to it this year, one of which gives the licensing boards and commissions an actual 90-day period to themselves notify their own licensees. And after 90 days, if that licensing board or commission has not taken action on the license, then through operation of law, it would come back to, the debt essentially would come back to the FTB. It would be up to the FTB to send a 30-day notice, and then after that 30 days expires, then by operation of law, the license would be suspended.
Oh, I see.
So that was one of the...
We just need to think about what the process is then, yeah, whether you use... I mean, I had sort of thought of it as the next time it might be simpler if you just provide notice to whatever agency gives their license out, and then next time their license is due, they would say, we're not renewing it until this is resolved. I mean, wouldn't that solve?
That's a possible way to do it. The thing is,
simpler to me.
Some of the licenses, though, don't come up for renewal on a yearly basis. Some of them are on a much longer period than 1 year. So that's why that doesn't always work well.
That's a fair. Okay.
Another thing that...
I'm a lawyer. We're every year, so I'm used to that.
Another thing that amendment Mr. Eng took was with regard to lawyers. And there is a separation of powers issue having to do with the court, because the Supreme Court oversees the practice of law for lawyers.
That's true.
And so what has happened is the language in Mr. Eng's bill was amended so that the Supreme Court would have the power to delicense people, which is the same thing that's done for child support.
Oh, for a state bar. Yeah.
Correct.
That makes sense. Okay. All right, next, page 20. Let's look at those and let's get as much information as we can, and we'll look at all the bills and see what kind of language. Cause I just think all of these make more sense as a trailer bill if we can get them done sooner and urgency and get them into effect. The sooner the better, it would seem to me. But and finance, we'll want to hear your positions on any and all of those proposals. Do you have any yet? Or?
We have no position for you at this time.
Okay, so we need to think about that too while we're at it. Okay, page 21. I mean, we'd want to hear from the governor's office, basically, because we've vetoed versions of this and we're doing the other things. So if we're going to rewrite them, let's just rewrite them and get them right. All right, FTB, data security.
Okay. This includes two of our budget change proposals. The first one is security workload growth. We are requesting funding of $447,000 and the conversion of 5 limited-term positions to permanent, associated with increased demands for securing FTB critical assets. Our information systems contain vast amounts of confidential and sensitive information that, if compromised, would result in a negative impact to the collection of tax revenues. The positions perform security audits analyzing system and application audit logs that identify instances of inappropriate use and access. They also perform vulnerability assessments of perimeter and internal network attached devices.
Is there any objection to this? Okay. Hearing none. Let's vote. It's way too complicated for me. Yeah, let's just get this over with. Whatever. All right.
Okay. And the next proposal is IT refresh. We are requesting an augmentation.
Oh, those were both on the same page for us.
Yeah.
We're done.
Oh, great.
Oh, okay.
Next, we're on to LLC problems.
All right, limited liability company refunds. We are asking for extension of 3 limited term positions for another year so that we can continue to clean up the claim for refunds that are being generated as a result of court decisions showing the partial unconstitutionality of the fee that's assessed against these limited liability companies.
Oh, it was the way the fee was calculated. This is like the water board suit, right?
Correct.
One of those?
Not recognizing
and this one is
in-state and
actually
out-of-state.
finished, though?
I'm sorry?
We have 2 lawsuits that are finished that we lost and we're paying back people on?
That is correct. And then there's one pending representing California's entirely within California. So it's a vastly different fact scenario than the cases that have already been dealt with at the court level.
What does this one do? Sorry.
The third case.
The Bakersfield case, what is it?
Right. Bakersfield case has actually been withdrawn for other reasons. It's actually a fact pattern similar to Ventus, which is in and out of California. There's a new court case. It's called California Centerside 2 LLC, which deals the corporation is entirely within California, and they are contesting the application of the fee. So it's a very different argument than what you saw in in Ventus and Northwest Energetic.
And those have been resolved with statute so that it's not an ongoing problem.
Correct. Yes. And so we're cleaning up the claim for refunds that are coming in where taxpayers are recognizing their in and out of state operations and therefore due a refund.
Okay. Unfortunate, but such
We
it
expect
is.
to have that done by the end of the budget year.
Oh, good. Okay. So those are limited term? Okay.
They are one-year limited term
I see one more year
extension.
of limited term that had already existed. Okay. And
Sure.
now, and the other is this collection account?
The court-ordered debt, we're asking for the conversion of current limited-term positions to permanent positions, 8 of them. What this is we've, in our efforts to assist the court in collecting their debts, we've put a technology application in place. The vendors are now leaving. We need to support that system to make sure that it stays up and running to validate and get this money in for the courts.
Okay.
And these positions are fully funded by the courts.
Can you take a portion of it, like in payment, out of the court's fees to pay for your positions? I mean, it's like a collection fee, right?
Right. The courts at this point fully fund these positions, so there's no general fund revenue that's used to support
All
them.
right. This is the court collection account pays for the position?
Correct.
Okay. So you pay for it out of the stuff you collect on their behalf?
Yes.
Okay, that's
Okay.
useful. How much do you think you collect on their behalf, just so we know to tell them later when they come complain?
Yeah, it depends annually how much we are able to dedicate to that collection, and then of course how many collection accounts come to us from the courts themselves, because they're not mandated to give us their collections
We
account.
might want a little look at that one before we get to talking about courts later in the year. To see maybe we up you more and help them collect more, and maybe that helps us in some other ways. So that's one we may want to take a look at in the court context.
Yes, with the implementation of this technology platform, we were able to substantially
You're able
increase
to
our
improve it,
efforts
so we need to
and
look
revenue
at that,
associated
see
with
what it
it.
does for the courts is what I'm.
Yes.
So we may need you to give us a little more data on that one, or possible expansion of it might help them, or try to get more of them to use it if they're not. So a little update on all of those things might be helpful.
Yes.
Okay.
Very good.
Finance letter reducing this is the finance letter from the first page.
Yes.
That reduces the positions because we no longer have a homeowner assistance program, right?
Yes.
We
have that one.
eliminated it forever, or we suspended it? Elio?
Well, the legislature really never chimed in. It was a gubernatorial veto,
another one of
and so it's eliminated as long as you don't fund it. At this point.
So it wasn't statutory?
Correct. The program's all still on the books. And so it just requires an appropriation in the Budget Act.
Oh, I see. Okay. So we didn't eliminate the law. We just eliminated the funding. All right. Okay. All right. Anybody have any objections to any of those three? Hearing none on a 3-0 vote. Okay, homebuyer tax credit.
For the homebuyer tax credit that was recently enacted.
Here was my only question. Let me just cut to the chase here. What happened to the folks who implemented last year's? Why do I need more new positions when we had a similar tax credit last year? What happened to those people?
Those folks were limited term positions that are going to expire as of June 30th of this year.
So can I just extend those limited term positions rather than put new positions? How many
That
were
could
those?
certainly be wrapped into this proposal, yes. But there are additional requests that we're putting forward with resources because of the differences between the credit last year and this year. There's a much more extensive tracking required for Franchise Tax Board to monitor the credits, and the credits are twice as much. And we're actually anticipating almost a 4-fold increase in the amount of taxpayers that qualify for these credits. So
really?
Last time we had 3 limited term positions that we used for the home buyer credit, and this time we are asking for 9 on a limited term basis as well for a single year.
Okay. It's 1 year limited term?
Yes.
Okay, not 3 year. We had that there. Our suggestion was 5. I'm wondering if you continue, but I'm concerned about the 3, I guess. So those would expire.
And then we asked for 9.
Seems similar to.
So well, you could view that as extending the 3, but asking for 6 more.
How about we extend the 3?
Yeah.
I mean, those 3 people are still there, so we could extend.
At this point, they're
positions.
still there, absolutely.
And they'd be doing essentially the same job. This might be a little
Recognizing the
variation
differences
on
in the
theme.
credit, yes.
I think the big question was, we thought 9 was too many. Leo? We were at 3 plus 2, not 3 plus 6, so.
There's certainly some more workload. If you fund the 5 as your agenda indicates, you're almost doubling their staff from this year. With the,
6.
You know, it's a little bit of a judgment call.
3 plus 3. 3, the current 3 extended for an additional year, and 3 new positions, also 1-year limited term. Senator Dutton?
Yeah, I just want to make sure that on this here, the reason why this is necessary is because we gave a certain dollar amount that needs to be tracked until you hit that amount. If we had actually just established a simple date that as of such a date, you're entitled to this, and we weren't expecting you to track it, then you wouldn't actually need these people then.
That's probably a fair statement, but depending on the amount of the credit, whether it showed up as part of our audit workload or not, it's a separate matter from that.
The whole point I'm trying to get to is that there's a cost because you have to track it.
Right.
If you didn't have to track it, it was just a matter of a
Right.
matter
And then
of
there's
law.
upfront validation associated with this credit as well, as opposed to what we normally do in our audit process, which is post-filing of the return validation on select
So if we're going to do
taxpayers.
things like this in the future, it might be wise for us to think about how we can fit it in within your normal tracking processes as opposed to making it a special when you have to track the dollar amount. Is that
Right. Yeah. Our estimates
That's what I was getting around to before. The problem is when you do this, you're spending money trying to track something. We probably would have been better off having a firm date. It would have made it easier.
Talk to the governor. It was his bill. I don't know. Finance, why did you do it that way? Did you talk to FTB before you proposed this?
I'm sorry I wasn't involved with that bill. I don't have that information. I can
Anybody
certainly look
around
into it for
finance
you.
that's
Yeah,
here?
I certainly won't speak for the governor, but at least this way you know what the liability to the state is kind of locked in. You know, I would assume once we have a little bit more experience with these kind of programs, we'd be able to better judge the revenue estimate for, say, a 12-month period. You'd have a pretty good idea. I think at this point, everyone's just a little unclear how fast $100 million in credits will go, and so if you know.
Last year it went real quick, and
We're anticipating within 4 to 6 weeks, the home buyer credit will be extinguished. Then first-time buyer credit is a little bit longer.
because you're going to have to look at the income eligibility and all that.
Yeah, so there's less first-time buyers out there than any-time buyers, and that's why the home buyer credit.
And so last year's, then there's no income eligibility on that, so it's not as hard to follow.
Yeah, based on last year, we're expecting about 1,300 applications a week to come into Franchise Tax Board to be reviewed for the credit. And yes, there is extensive tracking associated with it to make sure the entire credit doesn't go over the cap, and documentation is in order. Extensive work with the escrow companies and taxpayers.
Well, the other problem you have too is that people in good faith are making acquisitions, things like this, and they don't know if it's expired. And then plus this program here, the other thing we've done too is that we've actually scored the expense, or all in 1 year, yet it's spread out over 3, and so.
No, I don't think we did. No, we scored it over 3.
We scored separate,
right? Finance? Yeah, we scored it.
Should have been.
Again, I'd have to check on that.
Okay, I think we scored it spread out over 3.
Yeah, this is the one the governor's budget actually didn't score any cost for.
Oh, that's right. Governor's budget had no.
No, that's right. I forgot. It was the original one we didn't. The original one was scored in 1 year.
But we expect to score this out over the multiple years.
The governor proposed, we might want to send the message back to finance. Governor ought to account for this in the budget, since it was his proposal came with his January budget, but somehow wasn't accounted for in that budget. This is that one. Yeah. But I did think when we did it, we were contemplating scoring it over the 3 years, not in the single year.
Yes, I'll follow up on that.
Okay. All right. Thank you very much. Franchise, keep collecting. Do your best. Oh, do we have to take a vote? Oh, okay. The question was 3 plus 3. It was 3. Continue the 3 current limited term folks from the prior homeowners tax credit that otherwise would expire, and add 3 new limited 1-year limited term. Okay. On that basis, 3-0 approval. Okay. Okay, these cash management issues, this is mostly things we kind of did in January and just catching up with what's going on, right? The April trigger didn't have to be pulled. That was good for everybody. I don't know how much LAO, how much we need to talk about this, members. We can just kind of move on, but go ahead. LAO, you want to do briefly? I had a couple of notes on page 3. I got question marks by numbers here.
Jason Cisney from the LAO. I guess for a real quick update, the key issue that I'm sure that Finance will be looking at in refreshing the cash forecast for the May revision is the shortfall in income taxes in April.
Right.
So the cash management package that the agenda refers to that the legislature passed and the governor signed earlier this year, it definitely reduces the amount of cash flow borrowing the state will have to undertake in 2010-11. And another feature was that, in effect, it also gave the state, the controller, and the administration a lot more flexibility in the event of a prolonged delay in passing the budget. The state typically cannot go out for cash flow borrowing until the budget is passed.
Right.
So the shortfall in April revenues definitely hurts that, but it's important to keep in mind that between revenues and disbursements and the state's borrowable resources, the state entered April over $4 billion better in cash cushion than was projected in January.
Good job.
But the April issues definitely will hurt. And also it's important to keep in mind that now, because of the shortfall in April, the amount that the state is expecting to bring in under the January forecast in June is actually even more, in part because of the accelerations of tax revenues that you adopted last year. So June is going to be a very big month for the state's cash flow. The bottom line is that with the drop in revenues in April, the breathing room that you put in place effectively for a possible late budget enactment is reduced. And so the bottom line is that in terms of the possibility of the controller having to issue IOUs, the sooner the legislature and the governor can agree to a balanced budget and let the state go out to the note markets, the less likely that IOUs will be there. The longer the delay, the more that revenues are affected in June, the more likely the controller will have to issue IOUs this summer, as he did last year.
All right. Now, on page 3, could somebody explain to me why a number that was the revised cost for 09-10 triples when it gets to 10-11?
Greg Bruss, Department of Finance. When we did our projections at governor's budget, we knew what the costs were essentially for 9-10. For 10-11, there's still too many variables at that point in time to try to get a finite number on exactly what the out year, the 10-11 costs would be.
Okay.
And as part of our May revision, we will be evaluating all the estimates to bring them, more realistic.
Okay. Yeah. I mean, 2 of them just looked way high. The external cash flow borrowing and the budgetary loans both looked sort of high, out of whack with the other one. So I would hope in May revise you could make those more realistic, because that would give us at least a better sense of what we're really trying to solve. And the closer those numbers are, and the fact that they might actually mean that we're $200 million better off than we looked on paper. Every little bit counts at this point. So, I mean, that would be helpful. Our only other thing and the only action item, members, here on this is to reinstate language that was in the prior Budget Act that somehow was deleted from the governor's proposal this time, which is the reporting to JLBC when they ordered repayments of loans. So if nobody has any objection, on a 3-0 vote, we will reinstate the reporting language that was in prior versions.
I'd like just to clarify a second. We're fine with reinstating the language. We
Okay.
thought there might be some duplication with that in a Government Code 16320 report that is outstanding loans that we do in February and August.
Oh, okay.
But certainly this is fine.
Okay, well, y'all work that out. If it needs to be not put in different place, or if however the trailer bills work. We just want to make the point that, we had it as budget bill language, and it was in the budget bill. So
Certainly. We
would reinsert it as budget bill language unless everybody were to agree that somehow it were covered. It's just helpful to have it in the budget bill, and then we track things better. All right, interest payments to the federal government. What is this, page 5? Okay. What is this? Oh, this is another one where it looks like the estimate's high here. Right? Speak, someone?
Cindy Fung with Department of Finance. Interest payment to federal government. The determination to determine the interest liability, there are 3 factors. Number 1 is annual expenditure of federal fund for major program. Number 2 is interest rate, and number 3 is the time factor. The time factor is basically from the time federal fund received to the disbursement of payment within. At the time when the government budget was projected for 2009-10, we do have data to determine for the anticipated expenditure. However, for the 10-11, we do not have any data. And in addition, we anticipate an increase of federal fund because of our American Recovery and Reinvestment Fund.
You expect more of that next year rather than this year? I thought we got more of that this year than we're ever going to get ever again in life.
Larry Satter, Department of Finance. This appropriation is based on expenditures made during the current year. So the 10-11 amount is based on 9 and 10 expenditures. So yes, our monies are pretty heavy this year. And at the time we prepared the governor's budget, we had limited information on the expenditures.
But the 10-11 expenditure is for what happened in 9-10? Is that what you're telling me?
That's correct.
And why are we paying interest? I'm missing this.
It's by federal law they require interest payments. It's a law that requires the effective exchange of federal monies. So anytime we hold on to their money longer than they hold on to ours, we have to pay.
So why do we hold on to their money long enough to have to pay? Why wouldn't we want to get it out someplace where it's being spent on people's salaries or something?
Part of the factor is at the time that it takes to cash the check. So that's out of our hands in most cases. Individual business may take many days to cash a check, and that's factored into the interest calculation.
Oh, I see. It's a weird process. All right. So there's language here that would remove augmentations. What is this about? LAO? Retain reporting but remove caps. I mean, is this number real now? I mean, it went from 30 to 5. Now is it really 30? Or we're going to look at that again and may revise?
We're looking at the 10-11 number during the May revision process now that we have additional data.
All right. We'll hold further discussion until we have that data and may revise. Debt service. Oh, that's why you're here. Treasurer's office. Oh, this is GO bond debt. Okay. Speak. Someone. Who's up? Somebody? Anybody? Want to explain this to us?
Brian Dewey, Department of Finance. I was asked to be in attendance today to answer any questions the committee may have. and I'll be happy to do that.
Okay, so what we have here is how much we're paying in bond indebtedness. And where are we on the issue treasurer's office? Go back there, or you're here.
Good afternoon, Blake Fowler with the State Treasurer's Office.
So are we issuing bonds now? Are we? What is the status? Because this has been the 2 years we were going through that whole thing that you couldn't issue.
We are issuing a lot of bonds. In the last 14 months, we've issued about $25 billion of general obligation bonds.
14 months, $25 billion?
Yes.
I think one thing to add, and it's the second informational item on this page, is that the administration recently has released a budget letter that effectively lays out the anticipated bond cash flow for each department over roughly the next year. It assumes somewhere in the neighborhood of $14 billion of bond issuance in the next year. That's not unreasonable. That the state, as was mentioned, has been very active in the bond markets recently. And so,
mostly transportation, water, what? Do we know?
It's a mixture of all of those. You'll see in the attachment to the agenda, which is the spring bond sale plan, and we summarized the spring sales. We sold a total of $5.9 billion already, of which 2.5 was for existing or continuing projects, and $3.4 billion was for new projects. We note here that we weren't able to meet all of the new project needs in the fall. We do think that there's a possibility of another sale of approximately $1 billion or so later this spring, depending on the May revision. But we also plan that those remainder of those needs will be funded in the fall bond sale. The budget letter was put forward to give departments and those that work with the non-state funding partners, give them predictability and transparency in our bond funding process, to allow them to start planning and ramping up their programs so when bond funds are available that they'll be ready to go and spend those bonds. Because there's been, a certain amount of uncertainty over the problem.
Yeah, because of last year. Yeah.
Because of last year, and essentially what's happening here is we went from a program where we funded projects up front with interim financing, and then we had to switch from that to a front-end financing with upfront bond proceeds. And so it took us a while to kind of get over or through that process. And
I got to go to the vote only, so both of you need to come back quickly soon, in a minute. Okay, I don't want to lose both of you and then be... How about this part? I just want to understand the interest payments, but it is an informational item. But there is, just hold a second, page 8, 9, and 10 we leave open. 8, 9, and 11. There are 2 issues on page 8, 2 on page 9, and 1 on page 11. That seemed less than controversial. Yeah, because then if Korea comes back. We're on page 8. Cleanup session? No. Is he where I am? Yes. Cash. What doesn't say that here? I don't know what he's reading. Okay, thank you. Clean up special session cash measures. That one. Placeholder language. On both. And then the tax credit allocation fee. Okay. On a 2-0 vote, we'll leave the roll open for when Senator Padilla returns. On page 9, these are the Treasurer's Office local agency investment fund fees. Okay, so for right now, the first one is a 1-1 vote. And then the past due bond redemption. Okay, on a 2-0 vote, again, leave the roll open. The next page, I think we're going to leave open, right? This is the under collection. issue. We'll just discuss that briefly. And then page 11, we have placeholder language again. Would reduce the state costs of undisputed refunds that are paid less than 40 days after receipt of the notice. This is LAO trailer bill.
It's administration trailer bill, but
administration trailer bill. Okay.
We're supportive of it.
You're supportive of it, or did you amend it in some fashion? That's why I have the LAO.
No, it's
Okay.
it effectively it basically brings various parts of code that now have slightly different penalty payments for the state in making a late payment, and it conforms them. It would have the effect of reducing the state's interest payment penalty for some late payers, but that penalty would still remain substantial at 10% above U.S. prime, which today would be in the 13% range. So we think that conforming those sections of code makes sense, and the penalty for the state would still be quite substantial for these late payments.
Okay.
We still should be discussing
Policy? What policy committee? What policy committee would hear this? It's a language. I mean, I'd be willing. This was administration trailer bill. Where are you? You proposed it, right? Finance. This is governor's trailer bill. Do you think it's just conformity enforcement?
The trailer bill language cleans up two sections of government code and clarifies the interest rates, essentially.
All right, I'm okay with it, but on a 1-1 vote for now. Let's see if we can get Senator Padilla back, just in case. Okay. All right, now back to page 6. I think the real question here is just how much we're spending on the bonded indebtedness. We want these projects. I don't know if somebody's got how we're doing the analysis of if we're doing the bonds and the money's getting out on the street, and are we getting jobs and are we getting income off of it versus the debt payments, which frankly at the current revenues are high for our budget. $5 billion was 5 years ago was not high for our budget as a percentage to pay for debted and bonded indebtedness, but at the current revenues, it's high as a percentage of the budget. And I don't know what that does to the treasurer's market and our bond interest rate when we keep issuing them when we're paying this much.
For the last few sales, specifically the spring sales, we did very well. The interest rates were a blended rate, I think, for the 5.9 issued was about 5.2%. That takes into consideration the BAB subsidy. So far, the market, there was a strong demand. I guess the Treasurer's Office could speak to the demand for our bonds. But as far as getting the dollars out, we issued it was $1.9 billion in the fall for new projects, and we're getting the money out the door for those projects. This last spring sales, $3.4 billion for new projects. It's going to take some time to get the money out there in the street. We have to do the tax certificates and such, but we expect those projects to get going and get started and get the cash out the door.
I guess finance, when you're doing your 2010-11 projections, it would seem to me somehow we need to be accounting for the fact if we think we're going to have new people working because we're going to build bridges, and we know what the projects are. It's a question of how fast you get them out there, right? So we ought to think about that. I mean, we should be getting more income out of these deals, and that might help pay the interest on these bonds. I mean, I think we're still going to start to get a little concerned as this percentage number goes up over 5% because the revenues are so low, not because that wouldn't be the normal amount we should be spending.
Right. Those considerations would be addressed by our revenue projection unit.
Yeah.
For the bond forecasting unit, we're looking at is future bond sales, timing, interest rates and such. And so these numbers here assume future sales of bonds to meet the needs of the plan. And I'd like to remind the committee that we're going to be updating our numbers numbers as part of the May revision. And because of the positive results from the spring sale, we do expect some modest savings for the general fund debt service for current year and budget year.
Okay.
Savings not going to solve the budget, but it's
no, but every little bit counts. It goes back to my thing earlier about the over projections from January. Everything that we do to get it more realistic, and certainly if that more realistic allows us to acknowledge some savings, is going to help us get to a sooner budget, which will in fact allow you to be able to send bonds faster and more efficiently and more effectively. So
the difficulty with the bond modeling is there's so many variables. Trying to understand what the market's going to do, where rates are going to be. So we try to get it as close as we can, but obviously.
But I'm concerned that we may want to hold back some of it if we think we're getting too high on the bonded indebtedness and we don't have enough money to pay for stuff we ought to be paying for. And if on the other hand, your revenue and the economic forecast stuff, however you know, that must be a more artful way to say that. But basically, if the revenue forecasters were suggesting through their methodology that because we're planning to issue the bonds as proposed here, we expect, you know, unemployment to drop by 0.5%, and we expect more people to pay taxes that we can count in some fashion, then we might be offsetting the cost. And I'm just, I don't know how to think about that. I mean, I'm hopeful that all these bonds are creating jobs, but we're not seeming to feel that on the ground fast enough, and so it's a little hard to.
I mean, I think, of course, it's impossible to really
quantify
it's not
going to be dollar
how much
for dollar.
it affects on the economy. I think that most economic models, I think they really kind of already have
built it
that part of economic activity built in, because it's something that frankly the state's doing all the time. I mean, in most economic models right now, one of the things that is present is an assumption, you know, that the particularly the stimulative activity of the federal government, which is much greater than the state can do in many respects, that is in economic modeling right now. And so,
I mean, it's just that kind of stuff. It's just that kind of, you know, I mean, you either know you've got projects that you're going to issue them for, or you can stop and you cannot issue them and not incur the debt. And
I think one thing that what finance has done here, I mean, we've always interacted with the administration in terms of talking about the planned bond issuance of the year, the requested appropriation authority. But this type of cash flow modeling is very helpful. And, you know, if the legislature has different priorities for what should go first within that modeling, it could express it through the Budget Act. And if, as you say, the legislature, for some reason, if they wanted to reduce the amount of debt service and put it to other priorities, you could through the Budget Act make those decisions done as well.
Well, that's why
it would have the disadvantage of putting less into investment in the economy.
Right. No, I mean, but that's the point I'm making. I mean, you know, people did authorize the bonds. We have been moving forward on the theory that this was helping the economy, and that's why we were issuing the bonds and planning the projects and moving this forward. If I'm not getting the benefit of that in my economic forecasts, I might be more inclined to not want to spend the interest and try to preserve the programs. So I'm just trying to make sure that that's happening.
Over the past several sales in which we were constrained by the amount of bonds we could sell, one of our top priorities, aside from ensuring that continuing projects were funded and our existing liabilities were taken care of, was job creation. So we're looking for projects that were shovel-ready, things that we could get on the street and get people back to work. And so we've been focusing on that. Budget Letter 1009 that was just released continues that priority for those periods of time when we're constrained.
Okay. All right. All right, which was the other one that was a discussion item? Page 10. What is the issue here?
Hello.
I'm Beverly Yokoy from the Department of Finance. Would you like me to give you some background or just respond to your staff?
Short, yeah.
Short background?
Short, yeah.
Okay.
Trying to leave.
Finance is proposing language to allow authority to reduce the department's state operations budget and transfer funds to the general fund or central service cost recovery fund when a department has failed to collect or transfer statewide indirect costs when federally allowable, as required by existing law. Due to ARA and our cost recovery process, we began examining federal provisions on a grant-by-grant basis. And through this close examination, we found that some departments may have been somewhat complacent about recovering statewide indirect costs. The federal rules that provide administrative cost reimbursement do not uniformly apply to every grant, but we did find instances where there were departments that did not apply for federal recovery when allowed. This language will provide us a persuasive enforcement tool and will encourage departments to re-examine their federal grant provisions to see if they are maximizing recoveries to the general fund. The proposed language will help departments follow through on their commitments. It complies with existing code, and it will benefit the general fund condition.
So basically, departments are taking the federal money and they're putting it out on the street, but they're not keeping their overhead costs that they're entitled to?
Yes, in some cases that's occurring. In some cases...
Is the auditor looking at this when she does her federal audit stuff at all? I mean, she has to do the ongoing audits of this money.
There are some departments with, 1,000 grants, and it could be on a grant-by-grant basis. But we know some departments are flying under the radar, and this will help us get them to comply. We know with Section 8.
So when you know that, what do you do to make sure that
we've been working
fixed?
with our budget analysts and with the department, and we tell them this is a requirement of government code. And there
how
are
much
hurdles.
savings will you score if we adopt this language?
Well, we've already, when we do the statewide cost recovery, we estimate that the departments will transfer all the money that they say they will. But that's not the case. We have a 3-year average where we're receiving 91% of targeted recoveries. Now, some of that may be because expenditures didn't reach that level, but we know in other cases they're not recovering the funds or or giving us the general fund the transfers.
So you are pursuing your own departments to do what they're supposed to do? Is that
yes?
LAO?
It's a little bit of arm wrestling.
This has a little bit of overlap with an issue we've discussed in Sub 4 about the oversight of the state's ARA funds. And it does appear that one of the things that the state has learned through dispersing this huge amount of ARA money is that departments are sometimes lax in these recoveries. I think it's an interesting idea. I think you probably would want to assure that there is some sort of reporting requirement so that the legislature could be aware when funds are put back. But it's an interesting idea. I don't know what you could score from it. I think that probably part of it is to try to have a deterrent effect and to allow finance, for example, to hold departments' feet to the fire. It's an interesting idea.
We also feel it's a fairness issue because most of the departments are complying and recovering SHWAP and paying their federal cost recoveries to the general fund.
Oh, I see. So a lot of folks are doing this.
Well, we don't know that it's a lot, but we feel...
No, but are in fact doing what you want them to do.
Right. It's required by government code.
I see. All right. Anybody else have any questions? Well, okay, so everybody wants to kind of look at this proposed language, I think, everywhere and see how it works, and we may want legislative reporting language to go with it in some way, or anyway, everybody's looking at it. I think, do we have actual trailer bill, or is this just conceptual?
We have
actual trailer bill. Okay. So we'll let everybody look at it. Let's see if we can clean this out this week before we go to May revise, and maybe one more thing could be done if we can get agreement on the language. That said, I think that's all the discussion issues. Senator Padilla, we took a few votes while you were out of the room. Page 8. The vote right now is 2-0. Padilla, aye. That makes it 3-0. 1 and 2, yes, both issues, same page. On the page 9, we have to take them separately. Issue 3, the vote is 2-1. 1-1, sorry. Okay, now it's 2-1. That measure is approved. And on page 9, the number 4, the vote is 2-0. Yeah, aye. That makes 3, and I think there was one more. No, there's 2 more 1-1s. Oh, here it is, page 11. The current vote is 1-1. Padilla, aye. Okay, there we go. 2-1. I think that's it, right? Are we done? Okay, thank you very much, everybody. I'm a little longer. And we will be back again next week for, I don't know. So just don't make early plane reservations because it is the last Thursday before May Revise. We are going to hear cash and sort of revenue issues. We managed to get through the cash today, but we may have some cleanup issues. And anything that staff thinks about that you want to bring back before May Revise. Yeah, we're going to hear tax credits and revenues and changes of credits and all those things. Governor's proposals, other people's proposals, LAO proposals, right? Well, that's good for next week. That's fine, yeah. Well, since the May Revise was on Friday, I just didn't schedule at all. So, okay. So, it's our last shot to do things before May Revise, though. That's the whole point. And so there may be some cleanup actions that we want to do, and that's Thursday afternoon. Okay? Thank you very much, everyone. We're adjourned.